So, hey, what's up, y'all? Hope you're having a great Sunday. And for y'all watching this on the YouTube replay, just know we're going to be streaming in a couple hours from now as well. So, we're going to be doing a stream when the market opens closer to 8 o'clock tonight. And yeah, here's how I'll start the stream. I'm going to go over one stock in particular as I start the stream here. Warren Buffett just sold all his shares of this stock. So, Warren Buffett just sold out of this stock completely. But here's why I'm looking to potentially add more to that position. But first, I'll give you a quick stock portfolio update. Here's my three portfolios. I'll be pretty quick about this. This is my main taxable account. We're up 17% the past year, 13% year to date. Yo, this April crash was crazy. Y'all remember we were down like 14, 15% at one point. It was crazy. All you had to do is not sell, and you're doing great. You don't even have to buy the dip and you're doing great. So yeah, here's my total percent change on every stock in here. This is my dividend growth portfolio. Every stock in here pays a dividend. What do you think of Open Door? I don't love Open Door, to be honest with you. I think it's a bit of a meme stock right now, but that one is begging for a low interest rate environment, I will say. But here's my Roth IRA as well. I actually just bought some shares of RGLD. This is a gold stock. They collect a bunch of gold royalties, and it's like getting exposure to gold with a little dividend. So get a small dividend there. And then here's my buy and hold portfolio. So once I buy a stock in here, I try not to ever sell it. Yeah, hey, after I do the portfolio update, we'll get into the in-depth more analysis. But here's my buy and hold portfolio. Once I buy stock in here, I try and just hold it for the long run. I try not to ever sell it. You've probably heard of some of these before, like Amazon, Coca-Cola, Consolidated, maybe DocuSign. DocuSign's been kind of a poor performer recently. A lot of software has. Has anyone else noticed that? You look at like an Adobe, a Salesforce. These are really slugging right now, or like a Workday. A lot of these software names are struggling right now. But yeah, and then we finally have our risk on portfolio that everyone loves. So check this out. We're up 16% all time in here, which is not great, but still, at least we're green. We've underperformed the market. But here's some of our recent winners like Reddit, AMD, Futu, Robinhood, Dave. These have been some really good winners. We, of course, have some losers in here as well, like Zoom, another software name that's been a big loser. Zoom, UiPath has been struggling. But here's the stock I was talking about that Warren Buffett just completely sold out of. So Warren Buffett no longer owns any shares of this stock, and this is T-Mobile. And you'd expect on that news, you'd expect the stock to maybe go down. Warren Buffett sell out of a stock, but this one actually didn't care. So investors didn't really mind Warren Buffett selling out of this stock. Here's why I love T-Mobile. First off, their printed net income, over $3 billion of net income a quarter. And here's what I love: companies that return money to the shareholder. So what is T-Mobile doing with $3 billion of net income a quarter? Y'all won't believe this. Check this out. If we go to the total common shares outstanding year over year, where is it? Yeah, look at this. If you kind of look at the bottom here, they're spending $2 to $3 billion of net income every quarter solely buying back their own stock. That's what these huge negative numbers are, them buying back their own shares. So they're a huge shareholder-friendly company with a 1.4% dividend yield. When they buy back their own stock, there's less shares that exist, gives you more ownership in the company. It's just great news. It literally makes the stock go up. So yeah. All right, let's see. Yo, Intel's interesting. With the new government, we don't know how much of a stake the government's going to take yet. That'll come probably in a couple of weeks. But I'm actually might be crazy to say I might be looking for a very, very small position in Intel. Yo, Luffy, what's up, dude? He says SPSC stock is getting cooked. I haven't heard of this one before. SPS Commerce. So a $4 billion company. Yeah, well, at least they're up a good chunk from 2019 still. But yeah, look at them recently. They went from 180 to 112. So let's see what happened there. They miss on earnings. No, they triple beat on their earnings. So this company's in the fulfillment industry, one-time revenues, analytics, but fulfillment is most of the business. Let's see how the revenue's growing. So revenue's up 22%, net income's up 9%. So the margins did fall a little bit, but analysts were expecting that. Great balance sheet. Look at that. No debt. Let's see how much cash they got. $107 million of cash. So I wonder why they are getting cooked so much. Maybe there was some bad guidance or something. That's what you're seeing in a lot of stocks recently, like ASML, the Trade Desk. A lot of these names are the earnings were good, but the guidance is hurting them. Yo, what up, German? Hope you're having a good Sunday. Yeah, hope everyone's having a good Sunday. You buy the S&P. I love the S&P 500. Absolutely. UPS leaves. The thing with UPS is, speaking of the higher yielding names here, I think this one might be a dividend trap. So uh, you're buying this one mainly for the high dividend yield. But here, I'll show you this right here. Look at this yield you get. A lot of investors are like, whoa, a 7.4% dividend yield. That's pretty good. But look at the payout ratio to the right of this. They have a 100% payout ratio. So that's the bad news here. So I'll show you how you can kind of just do this on your own. Oh, yeah, we can get some cool data here. Revenue per parcel was up year over year, but average daily parcel volume is down a good chunk. Not great. So, yeah, if we look at the business again, not great. The business isn't growing. The lifeblood of the company, the sales are down 3%. Net income's down 9%. So they're losing their margins a bit, probably to Amazon or whatever. But check this out right here. They made 1.28 billion of net income this quarter. Let's round it up to 1.3. So they made 1.3 billion of net income this quarter. Let's go see how much the actual dividend cost exactly. And as we can see from right here, if you kind of look at the top right there, it cost 1.35 billion of net income every quarter. So in the two most recent quarters, they literally haven't been able to afford the dividends. So all of their profits are being eaten up to the payout ratio. So that's one, it's a tough buy there. Um, but yeah. Yo, Bogdan and Lil Monk, what's up, man? He said, is Hims a good buy? And Duolingo, Hims, let me go over Duolingo first because I really like this one. So Duolingo, this is that language learning application. If you've heard of them before, they've kind of been struggling, like kind of with all the software names. Yo, what up, Anthony? Um, so check this out. Yo, I have no leveraged ETFs, nor do I have any margin. I would be careful with those. But yeah, Duolingo's been struggling. They had really good earnings, but the stock fell after like ChatGPT announced like a competitor to Duolingo. So Duolingo, I don't really get it too much, but I guess maybe that's being priced in. But anyway, I love the growth of this company. Most of Duolingo's revenue comes from their subscription business. And look at this. The subscription revenue just hits a new record every quarter, every year, up 46% year over year. I mean, this is incredible growth. And not just the subscription revenue, but look at the advertising revenue. Advertising revenue is up 55% year over year. So both main segments are growing like crazy. Free cash flow is up 60% year over year. Net income's up 80. So yeah, look at that. Revenue, look at that. It just grows 40% every year, but revenue's up 41, but net income's up 84. So that means they're growing their margins as well. I mean, everything about this company is incredible. Also, look at the balance sheet. It just deleveraged like crazy. So if you're wondering why did it shrink, this you frequently see this with like DocuSign and stuff. The assets go down with the liabilities at the same time when you pay off a bunch of debt. So this is great news. So you really look at the asset to liability ratio and look at that ratio. The liabilities are now only 36% of the assets. They just deleveraged like crazy. It was a great quarter. And also, here's another example of that in the opposite direction. If we go and look at HIMS, this is the next stock we'll look at. If we go to this company's balance sheet, check this out. If you're wondering what happened here, why did the assets just go up so much? Well, they issued $1 billion of debt, which got them $1 billion of cash. So that's how their cash went from 273 to 1.12. So the cash they issued went up with the liabilities. So it's kind of normal to see this sometimes. But anyway, let me analyze HIMS for you. So a lot of people think this is a meme stock, but they have some serious growth that I really like about this company. But one thing that's really hurting them right now is they used to sell this weight loss prescription, Ozempic, on their website. It led to a lot of their growth. They sold this weight loss prescription, and now they no longer sell it. They lost their partnership with that. So they no longer have that growth driver. But still, look at the year-over-year growth of this company. It's up 72% year over year. I mean, that's incredible growth, no matter the company. So revenue's up 72. The free cash flow did go negative. So I do wonder what happened there, but that's doesn't matter so much when we look at the net income. Net income's doing great. 42 mil of net income. I mean, they're going to be making over 200 mil of net income a year from now on. So yeah, they're interesting. Hims before today had no debt. Now they do have debt, but that's okay. What happens is, yeah, hey, Jonathan, I'm actually on a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo, or you can just type it into Google. It's called Moomoo. But let's see here. Tonix Pharmaceutical. Yeah, hey, give me the ticker symbol for that one. Yeah, give me the ticker symbol and I can check it out for you. Yo, what up, Carlos? He says big short ahead of Bitcoin. Let's see. CoreWeave financials are shaky. Beware. So yeah, you know what? Let me go to that real quick. So if we go to NVIDIA's portfolio, as we know, NVIDIA is so big, they own some publicly traded stocks. One company that NVIDIA owns a bunch of is CoreWeave. And yeah, check that out. They have not been doing too good. They're up like crazy since its IPO price. A lot of that from just NVIDIA buying. I think NVIDIA owns like 8% of the shares. I'll have to check that exactly. But let's see. So the orange line is what the analysts were expecting. So they beat on revenue, missed on net income by like 20%. That's not great, but they beat on EBIT. I know this company has a bunch of like depreciation. So one thing I do love about this company is the growth of the sales. I mean, the lifeblood of the company. Look at this. Revenue grew 200% year over year. So that's really good growth. It went from literally 395 to 1.2 bill. So really good growth of the sales, but these net income losses are a bit scary. You're right. They're losing a couple hundred million in net income every quarter. Not exactly what you want to see, but we'll give them a few years. So, yeah, what up, Joe? As he says, can we look at Oracle for sure, man? Oopsie. Let's see here. So Oracle, this is a huge cloud play. Someone said what company was that? I forget which one we were looking at. By the way, if you missed anything, I'm also streaming on YouTube. You can replay it. Yo, Ellie, I didn't even see that. Thanks so much, Ellie, and thanks for the rose there. I really appreciate that. And Dat Pearl, thanks for the rose. If any of y'all got a stock you want me to look at, let me know. Oh, he said XBOTF. I'm not sure if I can find that one. Remind me to look at that one. I'll look at that one. Thanks for the rose. But here's Oracle right here. This is a huge cloud play. You also get a decent yield, 0.7% yield. They raise their dividend every year. But yeah, check this out right here. Yeah, cloud and license revenue is 85% of the business. And check out the profits this company's making right here. This is the impressive part. They're making, if you average it out here, well over 3 billion of net income every single quarter. So this company has a lot of money to play with. So they return a lot of this net income through dividends. They're doing some share buybacks. I know they're partnering with AMD. So yeah, Oracle is a cloud play. They are at all-time highs. I know they're getting some investments from like SoftBank or whatever, that project, Stargate project, whatever. But let's see if I can find this company. Dat Pearl. He gave a rose and he said, can we look at XBOTF? Yeah, hey, unfortunately, I can't view that stock on here, so I do apologize. Yeah, so yo, what up, Jack M? How's it going, man? Morgan Stanley and Goldman Sachs just sold $1 billion worth of CoreWeave. Oh, that's not good. VRT, a big player in the AI cooling. Yeah, you're right. So actually, another big player in the AI cooling is Comfort Systems right here. This is a pretty much pure HVAC play, heating, ventilation, air conditioning. And one of their main growth drivers has been from the technology sector, which I listened to the earnings call. They specifically said data centers and Bitcoin mining rigs are using Comfort Systems. They install they don't want to do liquid cooling anymore. They want to install the air pipes like in the server racks. It's pretty cool. So Comfort Systems is a cool one. I don't know if I'd buy this one at all-time highs, though, but that's been my best winner in here. Led to like all the gains in our portfolio pretty much. But let's see here. Oh, yeah, Plasma, what's up? He said AMAT. This is Applied Material. This one did just report earnings, so they had a nasty little candle right here. Not great. So check this out. They were down 14%. Let me go see what the actual numbers were. So yeah, it's a semiconductor play. Where are they from? So, I didn't even realize this. Did you know this either? So 40% of the revenue comes from China, then Korea, Taiwan, and only 14% comes from the US. Sometimes it's kind of, I didn't know that. I actually, that's why I like looking. But here's what I do love about this company. They're making a good amount of net income, 1 to 2 billion in net income every quarter. They have a dividend too. Look at that. You get a 1% yield here, and the payout ratio is only a 16%. So they have a lot of room to raise the dividend. They do that. They raise their dividend every single year. So pretty cool company, actually. But I would have to see what the guidance was. I know they're trading at like a teen multiple as well. Ooh, hey, Uber guy, thanks so much for the 4 chili peppers. He said the BLSH IPO. Hey, thanks again for the little gifts there. So what we've seen recently, and a lot of companies do this right now, whenever they IPO, they purposely IPO at a market cap that's undervalued. Like this one IPO'd at a $4 billion market cap, and it's just going to rocket the stock right as they IPO. So this one is interesting. I'm not actually too sure what they do. Do we even get any data from this company, financial? So yeah, we don't get too much information yet since they just IPO'd, but I do believe this is a Chinese company. I don't know. What's the market cap? Yeah, $10 billion market cap. They IPO'd at 4. So I got to do more research on them. I do apologize. That probably wasn't too helpful there. But hey, what up, Jello? Happy Sunday, everyone. Am I a ghost? What up, Joey? Yeah, hey, we don't really look at crypto, like XRP, Ripple. Like, I wish I could. There's not much I can tell you about this stock. A cool thing about crypto is, they don't have earnings reports. So there's no net income or net margin to miss on. So I can't really comment too much because I don't know too much on them and there's nothing to look at. But they've been a good winner. They've done really good recently. So pretty cool. Yeah, I saw this one a few times. What up, Pop Tart? BMNR, is that Ethereum company? So yeah, this is the company that Tom Lee started working for. He's like on the chairboard, or he's the chairman. He ever since he became the I think the CEO, I don't know, but the stock is up 1,000% since he started working for the company. Basically, this company is like a mini MicroStrategy, but instead of Bitcoin, they just buy Ethereum. So this company, you really just want to look at its net asset value to the market cap to see how much Ethereum they have versus how much the company is worth. Sometimes they do trade at a premium, but that's kind of like a pseudo Ethereum play. Let's see here. At that rate, CoreWeave is burning cash. I doubt they have years. Yeah, I do wonder, but at least they have a lot of high growth. If they're burning that kind of CoreWeave is burning that kind of cash and not growing anymore, that'll be bad news. But yeah, I'm not. I'm certainly staying away from that one. Even though Nvidia does own them. Hey, thanks, Ellie, for all the new roses. I do appreciate that. Well, yeah, hey, Slumped. I'm on a brokerage right here where you buy stocks and stuff. It's my favorite app for analysis. So if you want to get it, it's in the link tree in my bio, the very first link there. Bullish is involved in crypto. Oh, hey, thanks. I I didn't know that. I guess that makes sense. Rich Tech Robotics. I'd be careful with that one. So someone said Salesforce. Yeah, man, this is another software name that's been getting really hurt recently. Like if you look at Adobe, look at DocuSign, Salesforce, all these software names have just been struggling recently. Hey, thanks again, Uber guy, for all the gifts there. And look at this, Salesforce is the same price that it was back in 2020. So unfortunately, Salesforce has been flat for a while. Yeah, we can look at Enphase too. Yo, what up, Eunice? How's it going? So here's what I love about Salesforce is they have a very diversified revenue stream. Like, look, they're in services, sales, platform. They own Slack. That's their biggest acquisition ever. They bought Slack. I love that asset. Amazon uses them for their CRM. But anyway, integration to analytics, marketing, commerce. A lot of company. This company does revolve on like the white collar job market being so the PE of this company, let's see, what's the multiple of this stock? Is it still high? So it's a 37 PE. The industry average is a 37. So, it's not too shabby actually. So anyway, here's what I think investors aren't too happy with is like this high single digit growth. Like the revenue's only up 7.6%. I think from now on in the future, this is just going to grow like 7 to 8% a year. I think investors would like to see higher growth, although they did just acquire INFA. But yeah, this company makes 1.5 bill of net income a quarter plus. The free cash flow was crazy. Every Q1 or fiscal year Q1, they make a huge free cash flow number, 6.3 bill, 6.08 billion. So they have plenty of money to play with, but I think investors want some more growth. But I think that one's at a good valuation to nibble on. Actually, I do really like the valuation on on Salesforce. I'm surprised they're that cheap. So here's Enphase Energy. Man, look at the decline of this stock price. I feel bad if you own this one. Um, oh yeah, I used to own this. I think at one point I got out of it at 116. But yeah, this one the Inflation Reduction Act gave a bunch of incentives to solar, and those just got taken away recently. So the incentives are going away, but at least this company's making net income every quarter. I remember this company tanked because they were making like 100 mil plus a quarter. Then it went negative. Yeah, hey, try to spam there. Yeah, we'll get to Nvidia. Don't worry. But yeah, they're making net income every quarter. But I think it's the reason the stock is tanking so much is because the regulation outlook on solar, and I think their margins are going to go down. A lot of regulation is in favor of nuclear energy right now. Did anyone else notice that nuclear energy is really in favor? So, yeah, hey, let's see. Yeah, hey, someone said Tiva. Yeah, then we'll get to Nvidia. Don't worry, we'll get to Nvidia. But someone said Tiva Pharmaceuticals. So actually, they're a big market cap. This is a $21 billion company. Let's check them out, Eunice. So they sell generic products, including OTC. Okay, so that's down 2% year over year. Ostado, whatever that is up 20% year over year. And does down too. So it looks like they're very diversified, which I like. Let's see what the net income number is. So revenue is only up 0.3%. I think investors want a little bit more growth. So revenue's up 0.3, but they did make net income. That's great news. Yeah, they should be making like 400 or 500 million a quarter, but they're having these one-time adjustments, which is really weird. But still great news that they're getting to net income positive. Um, so do they pay a dividend? Probably not. Yeah, so they're interesting. Dang, yeah, the stock is the same price that it was back in 2001. So I don't know. They seem kind of generic. So yeah, we'll get to Nvidia stock right here. Let's do it. So Nvidia right here, obviously largest company in the entire world now, largest market cap, larger than Microsoft, Apple. So Nvidia is such a fascinating company. I actually own AMD. I kind of own their competitor. Kind of wished I owned Nvidia because they've kind of been doing better. You know, AMD's not at an all-time high. Nvidia is. Well, AMD's catching up though. But anyway, let me get back to Nvidia right here. Obviously, we know they sell GPUs. They have a huge market share. You know, a 20% PC GPU market share. They have this automotive revenue that the new Lucid cars are using. You know, Lucid just ordered Uber ordered $1.25 billion worth of Lucid automotive cars that use NVIDIA software for the autonomy driving. So anyway, but what I'm trying to say is the best part about NVIDIA is just this bottom line here. I mean, they're printing money. I mean, near 20 billion in net income every single quarter. I mean, phenomenal balance sheet, cash flows at a record. I mean, NVIDIA is just a phenomenal growth company. So yeah, the data center business is huge for them. You know, a lot of data centers need GPUs, and NVIDIA makes their own GPUs so they can get them the quickest and the fastest to themselves. Gia said, "What happens is, yeah, hey, I'm on a brokerage right here. So if you want to get the software I'm on, it's in the link tree in my bio. First link there. It's an affiliate link too. So if you go to deposit $100, we'll both get 5 free stocks. Or you can just type it into Google. It's a brokerage called Moomoo. So Motor Oil said NCNA stock. Let's see, NCNA. What is this one? Nucana. Yeah, so we don't really cover these kind of stocks. Here's what you got to be really careful with. If you look in the top right, you see market cap. This whole company is worth $7 million, and the stock's at an all-time low. So we don't really like to cover these kind of stocks on here. Let's see. The whole company's worth $7 million, and they lost 2.5 mil this quarter. 4, 5, 8, 10. You know, yeah, I can't trust that name. Be super careful with that one. Moderna or Pfizer? Pfizer is better financials. I kind of like Moderna more than Pfizer. Um, Actually, let's look at Pfizer right here. So Pfizer, you know, this company owns a lot of prescriptions, like they own Viagra, for example, a lot of weird stuff. But anyway, they were huge when they were able to sell the vaccines and stuff. But now the stock has kind of been struggling. Let's see. So yeah, Pfizer's the same stock price that it was technically back in 1997. So, but you're mainly buying this as a dividend play. Check this out. You get a 6.7% dividend yield here. So a really nice dividend on this company. Let's go see if they can afford the dividend. And because if we look right here, the payout ratio says 120% based off the last full year. Let's go judge it off its now financials because they were struggling back here. The net income went negative. Then they had these like low quarters. But let's see. They're making, let's just say $3 billion a quarter. They made $2.93 billion this quarter. Let's just say $3 billion. The cost of the dividend is $2.45 billion. So as long as they make $2.45 billion plus a net income, they can afford that dividend. And this quarter was great because they had an extra $500 million left over to do whatever they want with after the dividend. So that's good news. And we want to see them keep that up. What side? Yeah, hey, BK, again, this is a brokerage right here where you buy stocks. It's in the link tree in my bio, very first link there if you want to get this software I'm on. It's my favorite app for analysis. Let's see. I just sold out of most of my nuclear plays. Hey, they've been on fire, Plasma. You must have sold them for a hefty little profit there. Congrats, dude. You know, my favorite nuclear play, of course, is CEG. This is a Constellation Energy, largest pure play nuclear stock in the U.S. They own literally 50% of all the U.S. nuclear reactors. So yeah, they're the largest pure play for nuclear energy. Yeah, here's my dividend growth portfolio, by the way. All the stocks in here pay a dividend. Most of these, you know, like Google, Meta, not huge on the dividend, but still, they pay a dividend nonetheless. Oh, yeah, and here's my growthy portfolio right here. All right, let's see. Moderna, careful, large government money that was pulled out. mRNA under threat. Oh, that's interesting. German, if you want, I could still go over that stock right here, but let's keep going. What's this one? Jonathan said TTGT. Does he mean Target or Tech Target? Huh. Unfortunately, this stock is at an all-time low. Let's see. So yeah, this is a $400 million company. So very small market cap, probably just because the stock has gone down so much. Oh, and this is why. So this company is kind of have a chance to bankruptcy at this moment. Remember, the whole company was worth 420 mil. Kind of think about this logically here. They lost 400 million of net income just this quarter, just in the past 3 months. So and it's not just a one-time thing. The quarter before, the 3 months before, they lost another $500 million. So at this rate, they're going to be bankrupt in 6 months. So I think that's why they're pricing that one's at all-time lows right now. I'd be very careful with that one. Usually if you just go to the financials, usually explains why a stock's at all-time low. But yeah, for that one, I'd be careful. I see, even though it's at all-time lows, I don't think I'd buy the dip on that one. So yeah. Yo, what up, Robert? He said BMNR. Yeah, hey, this is that Ethereum staking company that Tom Lee works for. Basically, it's kind of like the Ethereum version of MicroStrategy. So yeah, we can see revenue from self mining. That's um, the Ethereum that they mine, and then they just now they've been issuing shares, raise cash, and buy Ethereum with this. So you really look at the NAV of their Ethereum versus the market cap. So is UNH still a buy long term? I don't know about right here, but under 300 potentially. One thing that I found very interesting is that Warren Buffett just bought a bunch of this stock. If you're wondering, like, hey, what happened to UNH right there? Why did the stock go up 12%? They didn't have earnings or anything. It's only because Warren Buffett bought this stock. And he has some warrants, not just shares, but like warrants for the company as well. So, Warren Buffett did his due diligence. Maybe he sees something in this company. Um, you know, the trend of the net income isn't great. Like they're expected in 2 quarters to only have $1.70 of EPS. That can't even afford the dividend. So that's why the multiple is collapsing. Hey, but look, you get a near 3% dividend yield with this company. We're a customer. We actually used OptumRx. And look at this. The OptumRx revenue is up 19% year over year. Wow. Dude, that's such good growth. Anyway, that's some good growth, but the margins are kind of falling here. As we know, the government regulation is not in favor of UNH. He bought in at 311. Really, Jello, that's lower than where it is today. So that's interesting. So Warren Buffett must have bought the stock, yeah, right at this price around here. Interesting. And then went even lower. What brokerage app is? Yeah, hey, yeah, thanks there. Linktree in bio there, BK, the very first link if you want to get this little brokerage that I'm on. Let's see. Thoughts on the Trade Desk. Oh, and the Honest Company. Yeah, we got to look at that one too. So the Trade Desk, this is that TV advertising company. They've just seen a lot of increased competition and customer losses from like big names like Netflix. Netflix no longer uses the Trade Desk, and this company still has a relatively high multiple. So they're trading at 63 times net income. Um, and it's okay to have a high multiple as long as you're growing to justify it. But this one kind of just lost their margins. Like revenue's up 18, that's good growth. Revenue's up 18, net income is only up 6. So that means the net margin did fall a bit. But still, they're making over 100 million of net income a quarter if you average it out there. So yeah, 100 mil plus in net income a quarter, still a very profitable company. But yeah, I think it was the guidance that also hurt them. I know Roku's kind of competing with them too. Yo, what up, Louis? He said Giga Cloud Technologies is the best, up 50% in 1 month. Is it good to buy and sell stocks today? You can actually, yeah, you cannot trade on Sunday. Well, actually, technically you can at 8 o'clock. So at 8 o'clock, the market does open. By the way, if y'all wanted the follow button, we're going to be live streaming later tonight at 8 p.m. when the market opens. So normally I'd be showing you my portfolio and how the market's open right now, seeing how we're doing compared to the market, but stock market's not open right now. So we're just going to look at stocks to potentially buy next week. And here's Giga Cloud Technology, someone just said. Let's go see how they're doing. So they just reported earnings and the stock gapped up like crazy. Let's go look at them. So off-platform e-commerce, Giga Cloud 1P. So they have a lot of businesses. I like how diversified that they are. So, oh yeah, look at that. So the analysts were expecting 290 of revenue, and they came in at 322. That's a really good beat. And a huge beat on the net income. They beat by over 100% on the net income. That's incredible. No wonder the stock is up so much. If you're ever wondering, like, hey, why is the stock up so much? Just go look at what they reported versus the analyst expectations. They had crazy beats on every metric. So you're right. Congrats if you own this one. They're making net income every quarter. Very nice there, Louis. All right, let's see. GSU. What up, Giacomo? He said CSU stock. What's this one? Let me know if you're talking about this Canadian stock right here, Constellation Software. Oh, hey, this is that company, I think. Yeah, this is a really cool company. One of the main growth drivers is they just acquire a bunch of companies. I read a little thing on them. The main way they return money to shareholders by like acquiring companies, which is pretty interesting. They are making net income every quarter. Great news. Yeah, wow, look at the operating profit. So this is really what you want to look at. Up 43%. That's incredible. 90% gross margins. That's the same gross margin as Reddit, man. So yeah, the software is a high margin business. I know software has kind of been struggling. You look at Salesforce, Adobe, but you know what? I'll put them on the watch list just because I've heard. Never actually looked at them before. You like Moomoo more or Robinhood? I like Moomoo more, Multiverse, just because Robinhood, you can't really do much analysis on this app right here. And with Robinhood, you have to pay like $5 a month. Yeah, you have to pay $5 a month to get a 4% APY on your cash. So if you have like idle cash, you want to earn interest on it, Robinhood makes you pay $5 a month, but not Moomoo. That's why I keep my cash here. So yeah, anyway, if you want to get this little brokerage I'm on, it's in the link tree in my bio, the very first link there. Oops, sorry, my screen froze there. Hold on. That is not good. Yeah, hey, sorry, my Wi-Fi is bugging right now. Hey, by the way, if y'all wanted the follow button, we go live every day. We're sometimes twice a day. Like today, we're going to be streaming later tonight. So yeah, make sure you're here if you want to hit the follow button for tonight's stream. Let me recast my phone to my computer real quick. Sorry about this. There we go. It had disconnected. Sorry, we're back. So yeah, that's why I keep my cash in here. If you look in the middle of my screen there, I have $570 of cash, earns you daily interest, made me 19 cents today. You stream every day? You share your portfolio live? Absolutely, yes. If you want to subscribe and hit the like button, I'd really appreciate that. How much profit have you made in the last week? Again, I don't realize any gains. I mainly just buy and hold stocks for the long run, but I don't know. Here's us year to date. This has been our best portfolio. We're up 41% year to date on a return money weighted average, mainly thanks to Comfort Systems. This is that heating, the HVAC company that's seen huge growth from data centers and Bitcoin mining rigs. Uh, let's see. Let's see. Can you trade on a foreign exchange? Yeah, you can. You can. You can buy the eh, Australian exchange, ADRs, the Chinese stocks like Tencent, Canadian stocks. Yeah. All right. Oh yeah, someone's been saying the Honest Company. So this is a micro app. Oops, that's Home Street. That's not what I wanted. HNST. So yeah, here's the Honest Company. This company just sells a commodity. They literally sell diapers and wipes. But if you look at the market cap in the top right, they're only a $420 million company. So that's a very small market cap. Only a $400 million market cap. So again, I don't love that. But if we go look at their financials right here, this is what I like to see. Uh-oh. This is not good. Hey, hold on. Sorry for the lag there. Oh, geez. Hold on. Okay, hopefully we're good. Probably not, though. Okay. Sorry. Yeah, so revenue's only up 0.4% year over year. I think investors probably wanted growth. Revenue's only at 0.4. They did make 4 million in net income though, so that is the good news. We want to see them, and that was real actually. So they really did make 3 mil, 4 mil in net income. One thing I do like about this company is that they have no debt. And let's see, they have $72 million of cash. So this company has no debt at all, $72 million of cash, and the whole company is worth $426 million. So a good chunk of their market cap is just their cash on hand, which is pretty cool. So yeah. Yeah, hey. Yeah, this is not good. Hey, if the stream goes out, we're gonna be streaming later tonight, so I do apologize. Man, hey, yeah, Open Door Technologies, I don't like that one. But we can look at them, I guess. Yeah, we'll look at Open Door Technology. So this company really wants a lower interest rate environment. It's so interest rate sensitive. And wow, yeah, man, this is not good. Okay, hopefully we're chilling. Yo, all right. So Open Door Technologies, again, what's the market cap now? Now that they've memed up, yeah, they're a decent sized market cap, a $2.3 billion market cap here on Open Door, which is interesting. And the CEO just stepped down. So the CEO, that was very interesting, just quit the company, which investors actually liked. The stock rallied on that. Maybe investors didn't like the old CEO and they liked the new CEO. So yeah, basically I would be careful though. This company still loses net income every quarter. So do beware of that. So we'd like to see them. They are trending closer to profitability though, so that is good news. But yeah, the revenue is still down pretty bad from like 2020. Like look at this. If we go back to a zero interest rate environment, like look what that'll do to the sales potentially. I don't know, but they're making 3 to 5 billion of revenue a quarter back in the zero interest rate environment. Now it's only 1.6 billion. So all right, says the connection is good now. So sorry for all the issues. We should be chilling now. All right. So yeah, Open Door Technology. We're just waiting for lower interest rate environment. Top two recommendations. I don't know. One stock I've been buying the dip on like crazy. Again, not financial advice here. Nothing in this is. By the way, watch out for people impersonating me. I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. I don't sell anything. Watch out for that. I'll never follow you or DM you. But here's the stock I've been dollar cost averaging into. Coca Cola Consolidated. Those are all my buy orders right there. And yeah. Um, Again, I recommend if you want to buy a stock, instead of spending all your money at once, you should dollar cost average into that where you slowly buy into the position. But just because you do that doesn't mean it'll always save you. Like look at this stock right here. We were buying the dip on this one, or we were dollar cost averaging in this one like crazy, but we're still down a huge chunk. So always go do your own research. Make sure you're buying a high quality stock by looking at their financials. What's the difference from that one and KO? So yeah, Coca-Cola, this one right here is the bottling company for Coca-Cola. They have a way lower dividend, way lower market cap. Like they're only a $9 billion company with a 0.7% dividend yield. But I love that company. I've done so much research on them. Again, not financial advice here, but let's see here. Benny said VSTM. I haven't heard of this one before. So very Veristem. So yeah, this is a $500 million company, so a very small market cap. I would be careful with these smaller names, but let's see what they do. So they just started selling something for the first time. Yeah, so if you go to revenue, I guess this is good news. And look at that next quarter. Next quarter is expected 6 million, then to 10 million. But still, what are the, oh yeah, so this is the terrible news. They're burning through like 30, 40, 50 mil in net income a quarter. And this is only a $500 million name. So when you're losing that amount of net income, that puts some real bankruptcy risk on the company. But they can't keep that up any longer. Um, all right. Interest rate cut by September. Hey, that'd be great for the market. Yo, invested oh 09. What's up, dude? Thanks for the lightning bolt. I do appreciate that, man. So yeah. Oh yeah, we could, yeah, Coca-Cola too. So, that one's a huge Buffett play. So if we go to Warren Buffett's portfolio right here again, like these are super investors, like Nancy Pelosi as well. They have to make all their trades public by SEC law. And Warren Buffett as well, Warren Buffett just took a stake into UNH. We can see all of his positions. And one of his main positions is Coca-Cola. It's 10% of it, 10.6% of his portfolio. Pretty crazy. And this is like a high yield growth name, a near 3% dividend yield on this stock right here. So that's pretty good. If you go to the net income right here, they're pretty much making 3 bill of net income a quarter, and then they just return a lot of that to you as a shareholder via the dividends. So pretty cool. That one's like a, yeah, like a dividend growth. He owns a lot of the high dividend growth names, like a Chevron, 4% yield, Bank of America. So those kind of names. Yeah, no problem, Benny. Last one, Lucid. Yo, I'd be careful with Lucid, man. So there is some good news recently, but they sold it off completely. So right here on this day, Uber decided to order $1.25 billion worth of cars from Lucid. And those Lucid cars are autonomous, and that software they're using is NVIDIA software, which is pretty cool for NVIDIA. But anyway, Lucid's at all-time lows. That's because there's real bankruptcy risk here, and they're diluting the life out of the shareholder. They're issuing shares while the stock's at all-time lows. And it's just not what it just drives the share price down. So, I mean, look at this, like just logically here. You're buying a company that look how much they're losing. They lost 540 million in net income this quarter, 400 mil last quarter, 400 mil the quarter before, 1 billion that quarter. So they're burning through money hand over fist. So, it's just a tough buy. And they're only a $6 billion market cap, $6.7 billion. When you're losing a couple hundred mil every quarter, that's devastating. Seek Nothing said, why doesn't anyone talk about AT&T anymore? So, yeah, hey, actually, one stock I do own that's kind of their competitor is T-Mobile. I love T-Mobile. Actually, Warren Buffett just sold out all of his shares of T-Mobile, but I love that company. But AT&T, dividends aside, this company is just like a kind of boring name. AT&T is the same stock price that it was back in 1998. So, but one thing investors love about this stock is the dividend. You get a 4% yield and the recent stock price appreciation. So yeah, look at this. Like this is rare. AT&T's basically doubled in just over a year. So they've had a lot of really good recent stock price appreciation, which is pretty cool. And yeah, they pretty much make 4 to 5 billion in net income every single quarter. They had a little one-time adjustment from this Warner Brothers Discovery spinoff, but that's why you look at the operating profit. But yeah, they pretty much make 4 or 5 billion in net income a quarter, turn like 60% of that via dividends and then a little bit of buybacks. So Yeah, he tried not to spam there. Clip, he said FIG. That's the new Figma IPO. So let's check this out right here. They did just IPO. Yeah, dang, look at that. They IPO'd, went up 150 bucks, and then sold all the way down to 80. So we don't have too much history behind this company, which is unfortunate because they literally just IPO'd. So there's not too much history that we get, but we can see the year-over-year growth. So the revenue's up 50% from the previous year, and the net income is up way more than 50%. So they're growing their net margins, 20% net margin. So their net income positive, first of all. That's great news. They're making net income every quarter, I believe. Pretty good balance sheet as well. So they're an interesting one. Do you like make apps or something? Like I know a friend who developed an app on the App Store using their software. All right. Let's see. BTBT. What is this one right here? Bit Digital. Oh, this is another like Bitcoin holding company, or it might be a Bitcoin mining company. I don't even know. Let's see. So cloud services, yeah, digital asset mining, Ethereum staking. Uh, yeah, so basically you look at the balance sheet for this company to see the Bitcoin that they own. I think they just own a bunch of Bitcoin, not too sure. But all I know is these don't really outperform Bitcoin. Like Bitcoin's done great. It's at a near all-time high. This one's nowhere near an all-time high. So I don't know if that one will really outperform Bitcoin. What about QUBT? Hey, that's a quantum name. So again, this one I don't think really deserves the $2.5 billion market cap. It's mainly just momentum that's been moving this stock recently and hype around the quantum name. Because look, it's a $2.5 billion company. You're buying a business that literally did $61,000 of sales this quarter, and that fell 66% year over year. And they lost 36 million net income a quarter. Yeah, they're basically losing 10 to 30 million net income a quarter for a company that makes 60,000 of revenue a quarter. There's so many better $2.45 billion businesses out there, like a Dave, even a Powell Industries, like this stock right here. Like this one's like $500 million more, but this is a $3 billion market cap, just a slightly more higher market cap. This company, makes 50 mil of net income a quarter. Revenue's good as well. No debt, 400 mil cash on them. All right, let's see. My account is up 300% the past week. Yo, that's crazy, dude. Congratulations, man. Ellie said CRSP. That's CRISPR Therapeutics. You know what? You know who owns that? Kathy Wood does. So if we go to the Kathy Wood portfolio right here, she owns a lot of the growthy names like Tesla, Robinhood. But then down here, 4% of her portfolio is in CRISPR Therapeutics. This is that gene splitting company. The unfortunate thing is why the stock has basically been flat for years is they're still a startup. Like they don't have any revenue. Luckily, they have a bunch of cash on hand. But like if we look at this right here, the revenue, this was a one-time adjustment right here, or not really. They sold an asset. So if we go to the cash from investing activities, they sold 100 million worth of assets. So that's why there was revenue this quarter. Anyway, they normally only do 900,000 of revenue a quarter. So pretty much no revenue. They lose 100 to 200 million in net income a quarter. But here's the best part about this company is that they have a ridiculous amount of cash. They literally have $1.72 billion of cash. But do notice the cash is slowly going down, that's because these net income losses. But anyway, we're waiting for them to finally start selling something. What app is this? Yeah, hey Cam, I'm on a brokerage right here. Yeah, if you want to get it, it's in the link tree in my bio, very first link there. It's a brokerage called Moomoo, or you can just type it into Google, but it's in the link tree in my bio, very first link there. It's also an affiliate link too if you want to sign up with my thing. We'll both get 5 free stocks if you deposit $100. Anyway, can you do Sentinel-1? Oh, and Zeta. Yeah, let me look at Zeta. Remind me, Barella, to look at Sentinel-1. Ticker symbol S, right? So here's Zeta. I really like the growth of this company right here. They gapped up on earnings too, which is good. They had a nice little beat on earnings. Yeah, dang, they were up 7.5% on Friday. Let's see here. So yeah, they beat on revenue, they beat on net income, and they beat on EBIT. So they triple beat on earnings. Yeah, nice revenue growth. Revenue's up 35% from the previous year. The net income losses are narrowing. They narrowed by 50% year over year. Fantastic. So probably by this time next year, they'll probably be making net income every quarter. And they deleveraged the balance sheet. Look at this. The liabilities used to be 62% of the assets. Now it's only 38% while growing the assets. So that one, everything there looks like it's headed in the right direction. See why they're doing good. All right. Opinion on SHLD. Yeah, hey, that's that ETF right here. So this company it's an ETF right here, just owns a bunch of aerospace and defense companies like Palantir, Raytheon, that owns Collins Aerospace as well. Rain Metal, that's I think a European name. BAE, Lockheed Martin's a huge one. Northrop Grumman, I love that name. So yeah, a lot of this is the aerospace and defense stocks, and that's been a sector that's been really popular right now. So yeah, let's go to Sentinel One right here. This is one of the few stocks with a singular ticker symbol, and I think this one is just kind of staying at this all-time low level is because they're also burning a lot of net income right now. So that's kind of the bad news about this stock. If you go to the net income right here, yeah, look at this. They normally lose like 70, 80 mil a quarter, but then this quarter they lost 200 million. So we do want to start to see these losses narrow on this company, but at least they do have some good growth. Revenue's up 23% year over year. So yeah, I think it's just those net income losses that are kind of scaring investors. Yeah, look at that. Analysts were expecting them to only lose 23 cents. They lost 63. So I want to see the losses narrow there. All right, let's see. Hi, is AI going back up? Yo, EMA, are you talking about the stock AI? Like is that C3 AI? Let me know if that's the ticker symbol you're talking about. Quime said BURL. Is that Burlington? Yeah, hey, this is like that store. I don't even know it's not like a grocery store, it's just like a retail clothing store. Let's see what they sell. So yeah, accessories and shoes, ladies apparel, home, men's apparel, kids apparel. So yeah, stuff like that. Let's see what they're doing. Wow, they're making a lot of net income actually. What are the margins on this company? 4 to 8% net margins, not too bad. So yeah, they're making over 100 million in net income every single quarter. Deleveraging a bit, investing in the company, which is good. So hey, not too bad. I think they're sound like a little boring, but which stock has been surprisingly good is I can't remember the ticker symbol. So is it DLL? Dillard's has been, oh yeah, DDS right here. Look at Dillard's, man. This stock is at an all-time high. In 2019, this was a $50 stock. Now it's $500. How did Dillard's 10x in 5 years? I don't know how they're doing so good. They're actually making so much money. Look at that. A 0.2% dividend yield, but the payout ratio is 2%. Super low payout ratio. So that's why they do these frequent, wow, look at that. So they did 25 cents and then they did a $25 special dividend. They do those every year. So anyway, wow, I used to own them. Dang, should have held on to them. All right, let's look at AI stock. Currently down a lot. I have calls on this company. So yeah, here's C3 AI right here. Dang, yeah, look at that. The stock is kind of at an all-time low or close to it. I think they also burn a lot of money. So look at this market cap right here in the top right. This whole company's worth 2.4 billion of net income, and they lose 80 mil a quarter. So that's well over that's like 300 million a year. So they're losing like 12% of their entire company every year in net income. So we want to see those losses narrow, but the growth is actually pretty good. They have the subscription business. I like subscription model companies, and look at that. Looks like it hits a record every quarter. They're beating on analyst expectations. So I wonder why they're getting hurt so much. And yeah, look at that balance sheet. I think they're a debt-free company as well. Yeah, they have 750 million of cash and no debt. So pretty much half their market cap is cash on hand. They're interesting. They're interesting. What do you think about investing into gold, SPDR? Yo, I just recently bought, this is my only exposure to gold. I recently bought this 2 shares of RGLD. This is Royal Gold. So it gives you exposure to gold, but with the dividend as well. It rhymes with the price of gold. It doesn't do exactly what gold does, but this is a huge royalty play. They have some ridiculous margins. So check this out. 40% of the revenue comes from their royalties, and it's up 50% year over year. And royalties are a high margin business. So look at that. 63% net margin in the most recent quarter. 75% gross margins. I mean, the margins are ridiculous here. So look, revenue's up 20, but net income is up 62 thanks to the net margin growth. I mean, I'm telling you, it's ridiculous. Plus, this is a debt-free company, 0 debt at all, $250 million of cash. So this is my way to get exposure to gold. RGLD, again, I don't have much of them, just 2 shares. And by the way, again, none of this is financial advice. Jeremy said, what platform are you on? Yeah, hey, I'm on a brokerage right here, where you buy stocks and stuff. If you want to get it, it's in the link tree in my bio, very first link there. It's also in an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. Or you can just type it into Google. No pressure. It's just brokerage called Moomoo. So let's see. What do you think of Celsius? Yo, this is This is a really cool company, especially after the Alani acquisition. So if anyone's heard of Alani before, it's like an energy drink. They just bought them. So I think they also got some shares too. So yeah, Alani owns 9% of the shares, but they own Alani. But basically, check this out. Look at the revenue growth. If you're wondering, how did the revenue grow 83% year over year this record quarter? It's from the acquisition. And on that, they made 100 million in net income. So I love that the growth is starting to come back for this company. So yeah, that's I don't have too much to say about them. I enjoy a lot of the Celsius drinks, like that. The pink rosé flavor is really good. And we have some, bro. I have this like I've only had one, but I have like a Alani like protein shake thing. Anyway, let's see here. ISRG. Yo, what up, Elizabeth? So let's see. ISRG. This is a huge health like healthcare instrument accessory play, and it's just an incredible company, very high quality, one you'd probably just want to buy and hold forever, no real reason to sell out of them. But yeah, if you look at this company right here, the revenue is up 21% year over year. They're continuing this strong double digit growth. So revenue's up 21, net income's up 24. Look at this net income every quarter. They're literally making 5 to 700 million of net income every single quarter. So incredible net income numbers and an absolute fortress of a balance sheet. So this company has no debt at all, $5.3 billion of cash. So, you can subtract that from the market cap, then do an X cash net income multiple on the company. They're even cheaper. So just a very quality stock, and they're probably just falling recently just because of the whole healthcare issue. The Ace said, "What's up?" He says, "I got a good one for you. EXLS. Yeah, hey, let's check it out. By the way, if y'all are enjoying the stream, appreciate if y'all drop a like for me. So here's EXL Services. So a $6.9 billion market cap. I've never heard of this company before, but let's see. They're trading at a 29 PE, which is historically cheap. So I like this because we can see where the revenue is coming from. Look at that. 34% comes from insurance, then healthcare and life sciences, banking and capital markets. Wow, they're in a lot of different industries. So it's interesting to see how like diversified that they are. United States is where 85% of the revenue comes from. So yeah, look at this net income. Good news. They're making net income every single quarter. 60 mil this quarter. Revenue's up 15, but net income's up 44. So they're growing the net margins. Yeah, look at that. 13% net margin. Not too bad. Deleveraging the balance sheet as well. Look at that. The liabilities used to be 43% of the assets. Now it's only 37. Good news. Free cash flow numbers look great. These year-over-year growth numbers are really good. So yeah, they're really interesting. I see why they're doing so good. Thank you. Yeah, no problem, EMA. Subhan said Lululemon. Yeah, let's do Lululemon, man. So let me get my water right here. Sorry. So Lululemon's been struggling recently just because of the whole industry kind of. You look at Nike, Louis Vuitton stock, all of them have kind of been struggling. But Lululemon is trading at a dog cheap PE. I know they just sell a commodity, but they do have some premium pricing power on their products. So they're trading at 13 times net income. We can see their number of stores right here. They have 770 stores, up from 711 last year. But here's the bad news about this company, why they're falling. They fell on earnings and then they just continued to bleed for another 10 days, and then here it is again. So this looks like heavily oversold, but look at this. The revenue's up 7, so the revenue grew 7.3, but net income actually declined by 2%. So what that means is the margins are falling, not great. But here's what is so impressive about the buybacks they're doing, because they don't pay a dividend. So look at this. The net income fell by 2%. Net income fell by 2%, but net income per share grew by 2.4%. That's thanks to the share buybacks. The share part of the ratio went down. So that's kind of cool. So the net income per share stayed positive thanks to the share buyback. So you literally own about 4 to 5% more of the company than you did last year. Pretty cool. I love share buyback friendly companies. So let's see. What depot are you using? Hey, yeah, brokerage right here. If you want to get it, Linktree in bio, first link. Bad PR. Um, let's see here. Can we do IREN? So yeah, this is IREN. Let's do it. So this company is another one. This stock is pretty much at an all-time high, or multi-year high today. So great news. Stock's at a multi-year high. Here is why. All you gotta do is normally look at the financials. It usually explains why. And look at how growthy this company is. The revenue, after going 230% the previous year, grew another 166%. So the revenue's at a record. Revenue's up 170% year over year, and they made net income on that. They made 24 mil of net income this quarter, 20 mil last quarter, and look at this balance sheet as well. Really good balance sheets. So, IREN's interesting. I see why they're doing so good. They're so growthy. What time do you time the market when you buy and sell? Not really. Yeah, I mainly just like to dollar cost average into these names. Like this one right here, I've been dollar cost average into this one like crazy. Or sometimes, if I see it's a good deal, I'll just buy all my shares and then I'll just chill on them for a long time. But yeah, let's see here. CWCO. What is this one? CWCO. Consolidated Water. So I think this is like a regulated water utility company. I don't remember. They're a very small one. So this whole company is only worth $500 million. So they're in services, retail, bulk, manufacturing. The Cayman Islands and Bahamas are where half the revenue comes from. Let's see. So revenue's up 3%. Net income they're making about 5 mil of net income a quarter. They do have a good balance sheet though. Luckily, they have no debt, 100 mil of cash and no debt. So 1/5 of their market cap is just cash. They're making a couple mil of net income a quarter. So, they're not going bankrupt. No chance of that. But, nothing's really blowing me away there. The business isn't really growing. So, they have customer loyalty problems at Lulu. Oh. So, Bless said Estate Lauder. Oh, and then Okta. Yeah, we can look at Okta and let's see. So Estate Lauder, if anyone knows who Michael Burry is, the guy from The Big Short, like shorted the market, real estate market in 2008 or whatever, he sold out of all of his stocks except for this one right here. So this is the only stock that he owns left. And this is that beauty and cosmetics company. You've probably seen it like Macy's or the mall or something. But uh-oh, I am not AFK TikTok. Okay. Sorry, I had to complete a CAPTCHA to tell TikTok I'm not AFK. So here we go. Look at this. Skincare is half their revenue, 51%. Then they're in the makeup business and fragrance. So usually a high margin business. But check this out right here. Here's kind of the tough news why the stock had collapsed so much since 2019. It was because of these huge losses. Investors weren't really expecting this. Look at that. They lost 500 mil that quarter, 200 mil, 200 mil. So they made 150 mil this quarter. So that's the good news. We want to see them continue this net income positivity. And yeah, look at that. The lifeblood of the company, the sales are down 9.9% year over year. So we would kind of like to see the growth come back to this company. But it was just severely oversold. That's why they've kind of recovered recently. Explain dollar cost average. So yeah, dollar cost average just means instead of spending all your money at once, buying into a stock, you dollar cost it, you slowly buy into the position over time. It's a more disciplined approach, more patient approach. But again, just because you do that, like look at this stock right here, I did that for this company, it has not worked out. So always do your own research. If you're going to continue to buy a company, make sure you do your research, make sure it's a high quality stock and all that. So yeah. Yo, Jeff Mack, happy Sunday, man. Yeah, I hope everyone's having a good Sunday. By the way, we're going to be live at 8 o'clock tonight. So if y'all want to hit the follow button, we'll be live at 8 o'clock tonight. How can we request? I'd like PM and Bull if you would. Yeah, hey, yeah, how do you request a stock? Yeah, you just type it in chat and I'll see it. Just put the ticker symbol and I'll check it out for you. And yeah, so here is, yeah, hey, New York. Oh, Michael Burry sold Estate Lauder and now bought United Health. Really, New York? Thank you for that, man. I didn't know that. So I guess Michael Burry doesn't own Estate Lauder. And by the way, yeah, we'll get to Zeta as well. So here's Philip. Actually, I can't talk about this industry. The last time I talked about this industry, they took down the live. But you get a nice sustainable dividend yield here, a 3.3% dividend yield. They've seen a lot of growth from Zen, or I don't even know if I can say that, but that's this revenue right here. It's up 15% year over year. But yeah, we're not going to talk about that stock anymore. But it's been a good performer. It's a nice dividend growth stock. But let's get to, Instacart. Then we'll get to Zeta right here. So Instacart right here, if you're wondering what just happened to this stock, why did they just gap down by 10%? That's because Amazon announced a new one-day grocery delivery business in over 1,000 cities. And basically that directly competes with Instacart. And I wouldn't be shocked to see their market share go down thanks to Amazon. And Amazon's now going to take a piece of that pie and probably be the industry leader. So good for Amazon, not great for this company. But for right now, let's go see how the financials are doing. So revenue's up 11%. They made 900 mil of revenue. And on that, yeah, nice margins, over 100 mil in net income a quarter. So like 10 to 15% net margins. Really good balance sheet. Let's see, do they have any debt? No debt, 1.6 billion of cash. Well, let me double check here. Long-term debt. Yeah, I don't believe. Yeah, they don't have any debt. Great. So, cash flow looks good as well. So, what's about the actual free cash flow? That's what FCF stands for. Yeah, they're making basically 200 mil of free cash flow a quarter, 100 mil plus a net income a quarter. So, they're a good company, but I do wonder what the future has in store for them. And by the way, I do own Amazon right here. Dude, Amazon just comes for every business. It's crazy, and that's what kind of led to a lot of this gain right here. Another thing, um, Amazon's getting into is selling like used cars on Amazon. Imagine that you find like a car on Amazon, and I'd love to see Amazon's like return policy and stuff because I trust them. Probably because I'm a shareholder, but okay. Coco Vita, yeah. What up, William? So in my fridge right now, uh, in my basement fridge, we have a bunch of this cocoa water. It's so good. Has you ever had the pineapple flavor? But basically, this is a very small company. All they do is just sell a drink. Look at that. It's a very small company, $1.88 billion market cap. They sell this popular coconut water. Yeah, Vita cocoa water, and they just make a lot of money from it. Yeah, 20 mil plus a net income every quarter from it. So good growth of the net income there. I do know they were having some issues with Costco. There was like a short thesis came out after like Coco had some issues with Costco, but I don't know. I love their drinks. I will say that. I don't know if hopefully they can get bought out or something. Is there any good nuclear buys right now? I always heard you say CEG is just so expensive right now. So CEG is actually trading at like a 27 times PE if you do it 2 years out. So yeah, my main nuclear play is ticker symbol CEG. All the nuclear names are too expensive. All the other ones I'd recommend, like VST, which only owns like 3 or 4 nuclear reactors, versus what Constellation owns way more. This isn't even like a pure play, but like Vista Energy would be the other pick, and then GEV. Those are the only 3 pays, and all of them all look like Constellation. They're all expensive right now, so it's tough. I would just chill on the sidelines, wait for a good opportunity. What platform do you use? Yeah, hey, Dim, by the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. Oh yeah, hey, my fault, New York. I didn't get to Zeta. I'm so sorry. Let's get to this one right here. So this one just reported earnings right here, and they gapped up on earnings. They were up 7.5% on Friday. So pretty good Friday that they had. But look at this right here. If we look at the revenue's up 35. That's good growth. That's what you want to see. Revenue's up 35. The losses narrowed by 55%, so even better. So probably by this time next year, they'll be making net income every quarter. They deleverage your balance sheet like crazy as well, from 63% liability ratio to only 38. I mean, great news here. Cash flow is insane as well. Yeah, let's look at the actual free cash flow numbers. Yeah, look at these free cash flow numbers, up 71% year over year. So anyway, they're just really growthy. I think investors are happy with them. So IBM, what up, Granny08? So IBM stock, yeah, this is a huge like consulting, analytics play, data play. So one thing IBM, I didn't realize how internationally diversified they were. So check this out. If we go to IBM's revenue source, 60% of it comes from outside the US, which is pretty interesting. But yeah, like I said, they're in software, consulting, and infrastructure. So I like how diversified that they are. They have 3 main chunks of revenue there, and they're pretty much making 2 to 3 billion of net income every quarter. I also like them for the yield. So if you're a dividend investor, you get a near 3% dividend yield with this company, and they raise their dividend every year. So uh, pretty nice. The PE is actually a bit lower than 38. They had a little one-time adjustment this quarter. It says it was negative 330. It wasn't actually. They actually made like 1.5 billion or something. So, yeah. Yes, no bias detected. Yeah. What else? Yeah, I wouldn't really look at XRP. Someone said, yeah, hey, try not to spam there, guys. We'll get to. Let's look at Novo Nordisk real quick. I saw that one. I haven't gone to it in a while. Then we'll get to BA and MP. Is it a good stock to buy? Yo, after the government deal, it's going to take 2 to 3 years for them to recognize revenue from the mine they're opening. But MP Materials looks interesting with the government stuff, but it's a rare. Anyway, let me focus on NVO right here. This is that weight loss company. So if you've heard of Ozempic, Elon Musk is on Ozempic. If you heard of Wegovy before, that's pretty much all the business, those 2 prescriptions right there. So if you look right here, it's a pure weight loss play. 94% of the revenue comes from their, look at that, obesity care products. So that's Ozempic and Uh, Wegovy, and look at this, the net income they're making. I mean, they're printing money right now. 4.2 billion in net income this quarter. You get a 3.33% dividend yield on NVO. Pretty great. But if you're wondering, like, why is the stock gone down? Why is the multiple collapse? Why are they only trading at a 13 PE? The industry average is a 28. Why the low multiple? That's because the patent for Ozempic actually expires in a couple years, and I think that's somewhat being priced in right now. I think in like 2027, so not great. And they did also slightly miss on their net income and EBIT numbers, so the margins got hit a bit. But it's still, I think that one's at a pretty good valuation. This might be worth nibbling and watching if it goes a little lower. So Thomas said BH stock. Yeah, so Boeing, government can't really let this company go bankrupt, but I just don't think it's a great one to own for the long run. I mean, they're still down bad from 2019. I mean, it's kind of like the airline stocks. You look at American Airlines, Delta Airlines, they're all down from their 2019 price. Maybe not Delta Airlines, but they're close. But anyway, the airline stocks I just don't love, But look at this, yeah. Defense and aerospace business, how's that doing? It's up 9% year over year. But the main thing I don't love about this company is the fact that they can't make any money. Did you know, like, Boeing literally has not made a single dollar of net income? Look, since 2022 Q3, all they've done is lost over like $10 billion. These are all net income negative quarters. They haven't made a single dollar of net income since 2022. So I just don't know about this one, but they have had a lot of recent orders. Like, a lot of our people that have made friends with the administration are ordering a bunch of Boeing planes. Like, China decided to resume the order of 12 planes, and other countries are buying a bunch of Boeing planes. Anywho, it's just probably not one that'll outperform. Like, I don't think it'll outperform the S&P 500 in the long run, probably, but it'll probably still be a decent performer. But nothing's blowing me away. They're also in some heat with the government too. They overpriced soap dispensers that they were selling to the government by over 300x. So they sold these soap dispensers to the military for 300x premium, and they got in a huge trouble for it. Anyway, someone's been saying RR, Rich Tech Robotics. This is one I don't actually like. So if you're looking for exposure to robotics, like if you're like, I want exposure to robotics, a great robotics company that'll be a winner in the long run, this is not it. In my opinion, this is some momentum small cap that you don't really want to touch, in my opinion. They're only a $330 million company. So first off, this whole company is worth $330 million, and the revenue is $1 million a quarter. I mean, this isn't good. I mean, they have no IP, no patents, no intellectual property. I mean, and they're losing a couple mil of net income a quarter. So if I wanted exposure to robotics, I'd probably go with an Amazon, and I do. I own Amazon. This is not a pure robotics play, but they have the best. It's still a huge. Will be chunk of their market cap. I love Amazon as a robotics play. Also, Symbiotic. This is a huge warehouse robotics company that works with Walmart with their logistics. So a bunch of warehouses that Walmart owns use symbiotic robots. And Walmart found it so useful that Walmart decided to buy a bunch of the company. So Walmart owns 14% of Symbiotic right here. And this one has real patents, real IP. I think over like 1,500 patents this company has. Revenue's up 30%. So this is like a more real robotics play. Same with Amazon. Great plays there. Hey, what up, Vanish or Viash? How's it going? And Mamba said AYTU. What's this one? Let's look at this one, AYT. Then we'll get to Archer Aviation. I2, oh yeah, so we don't really cover these kind of stocks on the channel here. So if you look at the top right, you see the market cap, it's only 19 million. So this whole company is worth 19 million. The stock's at an all-time low. Let's see these losses. Well, they actually made net income that quarter. I wonder how. Did they sell an asset or something? I don't know. Anyway, super careful with that one. Only 19 mil market cap. Yikes. Like, there's some bankruptcy chance there. Someone said UAA or PLNT. Is this Under Armour? Man, does anyone remember the Under Armour brand? This stock is literally at all-time lows. Whoa, Under Armour is the same price that it was back in 2005. So let's see, the whole company of Under Armour is only worth $2.2 billion. Just to put that into perspective, Nike's worth, I think, 112. Lululemon's worth like 40. But yeah, apparel, footwear. I know they had some deals with the military, Under Armour did, but not anymore. Yeah, look at that. Business just isn't growing. Dang, look at these year-over-year declines. So after being down 10% the previous year, it's down another 5%. And then the profits are so choppy, they're not really making any money. So yeah, Under Armour is just I remember hearing a marketing story about them in like marketing class, but they're not doing too good. All right, let's see. Someone said Rich Tech Robotics works with Walmart too. The restaurants and Walmart, I've never seen one of those, but that's really interesting, Nicole. I did not know that actually. Emax said what app is this? Yeah, hey, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. But my link up there is also an affiliate link. So if you go and deposit $100, we'll both get 5 free stocks. So yeah, link tree in bio, first link. Yo, Invested 09. Thanks for the lightning bolt there. Appreciate that. So Matthew said ACHR. This is Archer Aviation. Kathy Wood owns a lot of this stock, but here's why I'm just staying away from this company right here. Here's why. It's because they still don't sell anything. They're still a startup. So if we go to revenue right here, it says no data because they've literally never sold anything. They've never sold a product or a service, and they're losing a bit of money. About 100 million of net income a quarter. Not great. Luckily, they have an absolute fortress of a balance sheet because they've been issuing shares in a genius way. So this company literally has 1.7 billion of cash, no debt. What's the whole market cap? So yeah, a $6 billion market cap. So basically, that's crazy. Like 25% of their market cap is just their cash on hand. Stellantis, which owns like Jeep, Dodge, is the largest shareholder. They own 9.5% of the company. So it's kind of backed by Stellantis. Then ARK, the Kathy Wood ETF, owns another 5%. So anyway, that's interesting. They're still a startup, so I'm still being careful, but I'm staying away from that one. But someone said SoFi. Yo, I love SoFi. I do own them, by the way, here in my growthy portfolio. I regret every share I've ever sold of SoFi, man. We only have 24 shares left, but I want to show you why SoFi deserves to be doing this good. Like some stocks, even though they're at an all-time high, I think they're just going to continue to win, continue hitting new all-time highs. Again, not financial advice here, but check this out. Here's why I love SoFi. It's the growth of their financial services. I mean, look at this. It's up 105% year over year. What other company is growing like this? Not many. So the financial services business is doubled to 300 mil. If we kind of look at this on an annual basis, for the full year 2020, it was only 11 mil of revenue. Then the next year, only 58 million. Now in the most recent quarter, it's 360 mil. Ridiculous growth. It's a new record every quarter. People are just really starting to take SoFi serious. Revenue's up 42, and they made 100 million in net income this quarter. They're making net income every quarter. So growthy company, making net income, beating analyst expectations. I just like SoFi. I might be biased though, because I do own shares and I don't love them at this valuation. Exactly. I wouldn't, buy that one at $23 a share, but still they're pretty cool. No way I work for Stellantis. Interesting. Yeah, hey, Stellantis owns 10% of Archer Aviation. I think they just launched their 2 first flights or something. What is this one? ALLY. Is that Ally Financial? So yeah, this is a bank right here. A lot of people, I think my mom has a high yield savings account or some money market funds with Ally Bank. So let's see this company right here. So automotive finance operations, insurance operations, corporate finance, and others. So it looks like they're a big automotive loan business or something like that, which did fall 5% or 6% year over year. But they did beat on analyst expectations. Yeah, so they beat like crazy on the net income expectations, which is good. Do they pay a dividend? You do. You get a 3% yield on this company. Pretty good dividend yield on that stock. So yeah, I think this one's just like a bank, but I have to do more research on them because it says automotive finance operations. So it looks like a lot of their loans maybe are in the cars. So anyway, they're interesting. Pan W, yo, that's Palo Alto Networks. If you're looking for a cybersecurity play, you know what? You know who owns that stock? Pretty popular person. Nancy Pelosi does. She's a super investor. She has to make all her trades public by SEC law. And one of the stocks she owns is Pan W, Palo Alto Networks. This is a huge cybersecurity play, and I'm actually looking to maybe get exposure to this stock right here. And I love companies specifically that have subscription model businesses. And look at this. Half the revenue comes from their subscription revenue, and it literally just hits a new record every quarter, every year. If you look at this on an annual basis, I mean, this is what you see. If you were going to trust a stock to just buy and hold for the long run, I want to see a growthy stock like this, not one that has, single-digit revenue growth. This one's double-digit, nice. They're making net income every quarter, couple hundred mil. Free cash flows nearly $3 billion a year. So that's my main cybersecurity play. Then I like CrowdStrike as well. CrowdStrike's pretty decent. Oh, Nancy Pelosi owns CrowdStrike too. Cloudflare's not bad. But yeah, they finance GM. Oh, really, Michael? Okay, that's interesting. Ooh, someone said Disney. You know what? I do own that one. And yo, Ryan, what's up, dude? What's up, man? Good to see you. Oh, hey, we can look at Fortinet too. That's another. I was gonna actually let's look at this one first. Then we can go to Disney. Um, let's see. So do you like Adobe, FTNT, or Duolingo better? To me, my favorite one is probably Fortinet, just because of the industry. This is another company, kind of like Palo Alto Networks. They're in the cybersecurity industry, and a lot of their revenue comes from their subscription. Yeah, their security subscription. Look at this. This is another one that just hits a new record every year, every quarter, up 15%. Hits a new record every quarter. Like, that's what you want to see. I also love how diversified that they are. They have three main streams of revenue. Like, how's the product revenue doing? Products up 12. Technical support, that's up 13. So honestly, the best part about this company though is just the profits. I mean, look at this. They're making 400, 500 million net income a quarter. So this is after tax profits, incredible. They're also deleveraging their balance sheet like crazy. If we zoom out, the liabilities used to be more than the assets. Well, now the assets are a lot higher than the liabilities. So great news. I do wonder why they gapped down. Maybe they had some bad guidance or something. I am curious. Yo, Jeff Mack, do you want me to look at Celsius again? I think we already looked at them. Or I forget if I looked at them when you were here. Um, I don't necessarily disagree, but there have been significant management change. Previous manager was guarded some up 30%. Hey, that's awesome, Thomas. Yeah, I hope Boeing wins. But that's nice. You're up 30% on them. So, Nako said Riot. What is that the Bitcoin mining company? So I don't love this one. Oh yeah, we got to get to Okta too. Uh, Eli Lilly. I really love Eli Lilly as well. Here's Riot Platforms though, a $4.2 billion company. Yeah. So look at this. This stock is the same price that it was in 2018. Not great. I think it just mines Bitcoin. Yeah, look at that. So look, we can just see 93% of the revenue comes from Bitcoin mining. And you'd expect this one to, keep up with the price of Bitcoin, but it really hasn't. Bitcoin's at all-time highs. Bitcoin doesn't look like this chart. So in all honesty, I'd probably recommend Bitcoin over that one. Not sure if it'll like keep up or outperform Bitcoin. But let's see. Yeah, let's get to Eli Lilly right here. I'll be quick about this one, another healthcare name. So basically, Eli Lilly reported earnings and they gave bad guidance on their weight loss pill. So they have a weight loss injection, but they made this weight loss pill, and basically the pill didn't work. Like, the results were bad, and the stock tanked on that news. But market's starting to recover because they're like, it doesn't really matter because of how great all their other streams of revenue are. So check this out. If we go to what the analysts expected, it was a huge triple beat. They beat on revenue, they beat on net income, they beat on EBIT. I mean, it was an incredible quarter. You get a near 1% dividend yield with this company. I think it should show me, hopefully, wait, let me check right here. Yeah, we can see how diversified the revenue stream is. So look, Mount Jaro, then Zepbound. Basically, they have all these different prescriptions right here that they sell. So anyway, I do like Eli Lilly. Riot is not good. Yeah, I don't love Riot platforms. It just doesn't keep up with Bitcoin, and that's all they do, just mine Bitcoin. And to be honest with you, I'd rather just own Bitcoin. Wait, what is this one? CoreWeave. Okay, yeah, CoreWeave. If we go back to the NVIDIA portfolio, because NVIDIA does own CoreWeave, which is kind of cool. NVIDIA was buying the dip on CoreWeave, but basically they just reported earnings. I think there was a bunch of investors that sold out of this company. And here's the good news, at least. The revenue's been good. So look at this. The revenue's up 206% year over year. So pretty good revenue growth. So the revenue went from 400 mil to 1.2 bill. That's really good. But it's these net income losses that aren't great. I mean, look at that. They're losing a couple hundred mil in net income a quarter. I think investors want to see them start to narrow those losses. So yeah, that's the thing with CoreWeave. And they just acquired that Bitcoin mining company, right? Oh yeah, let's look at Okta right here. So yeah, this Okta, it's like another software company. The stock price looks exactly like PayPal or a DocuSign, or a Roku, where it peaked out in 2021, but ever since then, it's kind of just been like flat. So here's the thing. I think they're growing like just over double digits. Yeah, so look, they're growing 11% year over year, and they're just now getting net income positive. Check this out. If we zoom out, this used to be a tough buy. They were losing like 200 mil a quarter. Well, now they're making net income every quarter. They made 63 mil this quarter. Also, a really good balance sheet. Cash flow is really good as well. So, it's just like kind of stuck in the mud right now. I feel the same way with like DocuSign. Like software is not doing too good right now. Like, here's my DocuSign position. It kind of looks similar. But yeah. Let's see. Um, Yeah, hey, oh, Planet Fitness. You know what? Yeah, we'll look at PLNT. This is a gym. So, yeah, has anyone heard of Planet Fitness before? It's a gym here in the US, and basically they get a bunch of people to pay for their subscription, and whether or not they show up to the gym, they get that payment. So, yeah, corporate owned stores are most of the revenue, and it grew 10% year over year. Pretty impressive. So, the stores that the company owns, and then they have the franchise revenue. So this is high margin. The franchise revenue is also up 11% year over year. So both main segments are growing good. Equipment revenue, so they sell equipment to customers. That's up 22% year over year. Not bad. So yeah, this is pretty interesting. If you want exposure to gyms, this company makes 50 mil plus a net income a quarter. Revenue's up 13. So yeah, they're pretty interesting. Hmm. Let's see. Hey, Dante, no way, dude. Dante, thanks for the dinos there. He says USPS. Yeah, let's check it out right here. So, wait, USPS. Wait, are you talking about? Let me know if you're talking about this one. Are you talking about Ultimate Sports? It can't be. Give me the ticker symbol for the stock you're talking about. Yo, hey, try not to spam there. Stay tuned. Hold on. Um, there we go. So let's see. Oh, DLO stock. Hey, yeah, we got to look at DLO as well. That's a fintech. So you know what? Let's look at that one real quick. So DLO, this is D local. So they're like a foreign exchange, like currency conversion fintech kind of company. Like, look, transaction revenues is 98% of the business. And look, here's where all the revenue comes from. Notice the US and Canada aren't really on here. It's Brazil, Mexico, Egypt, all these Argentina. So it's not really a U.S. Company. But good news, they're making 40 million in net income a quarter. So they're making a lot of dollar hollers. That's good. So let's see. Oh, let's look at Upstart then. Yeah, UPST. So let's look at Upstart then. Thanks again, Dante. So Upstart right here. This I still don't remember what they do. So it looks like platform and referral fees. Well, look at that revenue. I love that growth. The platform and referral fees are up 105% from the previous year. So that's really good. Then interest income. Well, let's see the total revenue. So total revenue was up 101%. So revenue doubled and they made net income on that. And that was real. So they made 5.6 million in net income this quarter. Let's hope they can keep that up, keep up that profitability. Pretty interesting. All right, let's see. Um, yeah, let's look at Celsius again. So Celsius, yeah, if Jeff Mack's still here, I'll be really quick about this one because we looked at them not too long ago. But this company is doing really good because they just acquired Alani. Investors are really happy with that. So if we look at the growth the growth is finally back. So if we look at the revenue, it's a huge record, up 83% year over year to 740 million. Record revenue quarter. Also, they made 100 mil of net income. I think that's also a record net income quarter. So yeah, one reason why the stock fell a bunch, if we kind of zoom out on this company, why they fell from this $100 peak is because they had some issues with Pepsi and the net income went negative. But now the net income is finally back thanks to the acquisition of Alani. And Alani owns 9% of the shares. Then Alliance Bernstein does, ticker symbol AB. Oh, someone said Google. Yeah, I love Google stock. You know what? I'll show you my position in them. I do own them, so I might be a little biased. I own them actually here in my dividend growth portfolio. So every stock in here does pay a dividend. And my actual smallest holding in here is actually Google. They own YouTube, Google Cloud, they own Android, they're in Quantum, they own Waymo, and they're like an ETF in one. So I love Google right here. They're creeping up on a new all-time high. Check that out. They're at 205 and the all-time high is 208. So Google's pretty close to an all-time high. I think they'll be able to do that because look at this PE, the net income multiple. They're still only trading at 21 times net income. I feel like they have the ability to go up to like a 24, 25 PE, which will send that easily to a new all-time high before they really start to come down again. But I love how growthy they are. They print net income. I mean, they're literally making like 30 billion nearly of net income a quarter. Look at just the most recent quarter. They made 28 billion of net income this quarter. What is Google doing with 28 billion of net income a quarter? Well, check this out. This is why the stock doesn't go down. I feel like they spend 15 billion of net income every quarter solely buying back their own stock. I love shareholder friendly companies. So Google literally spends 14, 15 billion a quarter buying back their own stock. And here's what that does for you as the shareholder. So the net income is up 19. So kind of remember that. Net income's up 19, but the net income per share is up 22. That's thanks to the buybacks. You own like 3% more of the company than you did a year ago, and that's pretty significant. All right, sorry. Yo, Invested09, he says APLD and BAM. What is BAM? Oh, so this is Brookfield Asset Management. So yeah, they manage a bunch of assets. I know they just bought some like cell towers from AMT. Let's see. So yeah, you get a 2.66% dividend yield here. You don't look at the net income for this company, or I'll get back to that. But look, here's how diversified that they are. They're in credit, real estate, infrastructure, renewable power, um, incentive distributions, private equity. So I love how diversified that they are. And well, yeah, look at this net income right here. This is really good. A couple hundred mil a quarter. Um, Let's see, revenue. Yeah, so you mainly want to look at the operating profit, but still, net income looks great, actually. Yeah, their assets just went up a bunch. They probably acquired some new assets. So yeah, this is interesting. Yeah, Brookfield Asset is the largest shareholder. All right. Ooh, we got to do SoFi. I love SoFi too. Wait, there's one stock I saw in chat that I wanted to look at. What single stock would you recommend? Oh, I'd pick something safe like Microsoft or McDonald's. Man, I actually on Friday I bought another share of McDonald's. You know, they're a nice dividend growth company. So now I own 15 shares of McDonald's. If y'all don't know, this is like such a safe company. I bought it at 302. Um, anyway, McDonald's is really a real estate royalty company. So let's see here. Ooh, someone said AMD stock. Yeah, I haven't looked at AMD the whole stream. So let's check this one out. I love this company. Yeah, actually, I own them too, so I might be biased. Check this out. My largest holding in this account is actually AMD. We got 11 shares of this company. Oh yeah, and then there was Disney. Let me know if you want me to go over Disney again, or Roscoe, if I should go over Disney or that one. But let me look at AMD right here. So AMD. You know, a lot of the semiconductor names have been pretty good. You know, Nvidia's pretty much at an all-time high, especially with the tailwind of being able to ship their chips to China again. But AMD's really been growing the data center business because, as you know, data centers need GPUs, and AMD makes GPUs, so they can give themselves the newest models, the quickest, and at the cheapest price. So they have a huge competitive advantage. They made 900 mil in net income this quarter, up from 300 mil the same time last year. Look at the FCF, which is free cash flow. 1.7 billion of free cash flow this quarter. Look at this balance sheet. They have a monster of a balance sheet right here. No net debt. I mean, everything looks great on AMD in my opinion. So I do like them. I might be biased though because I do own them. But yeah, here, let's look at Disney real quick. So Disney, I do own this one as well. I got 15 shares of this company. Again, this one doesn't really outperform the market in the long run. Like Disney is the same stock price that it was in 2015. So it's not a company that'll probably outperform the S&P 500 in the long run. But let me show you what I like about this company. They finally got their streaming business really profitable. They just bought the rest of Hulu from Comcast, so they bought the remaining like 30% stake of Hulu. So they own Hulu, Disney Plus, they own ESPN as well. You know, the streaming business is what has led to a lot of this free cash flow profitability, these huge year-over-year growth rates. So they're also opening a new park in Abu Dhabi. So Disney, I think, you know, the S&P Global also just rose their credit rating, reaffirmed it as well. You know, I really like Disney right now, but I don't really know if they'll be a huge winner. All right, so let's see. STRD, what's this one? Strategy. Yeah, I don't know if this is what you're talking about. I don't think it is. It says the market cap is 990,000. So I don't think I can view that stock. I do apologize. But yeah, what up, Fork? You said MRK, please. So yeah, here's another healthcare name. What app is he using? Yeah, hey, Timmy, I'm actually on a brokerage right here where you buy stocks and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. All the apps I'm on are in there, but this one's my favorite one, link tree in bio, first link. They're affiliate links too, so if you go and deposit $100 on this app right here, we'll both give 5 free stocks. Or you can just type it into Google. It's a brokerage called Moomoo. But anyway, here's Merck right here. This one's kind of been struggling again, kind of like a Pfizer since the pandemic. They no longer have those vaccine red pill sales, but luckily, this one's still doing pretty decent. They're in animal health as well. 10% of this company is in animal health. I like that they have this exposure. It's up 11% year over year. Pretty good. Pharmaceutical revenue is down 2.5% year over year, though. So we do kind of want to see the growth come back because the lifeblood of the company, the sales, are down 2%, and the net income's down 18%. But they're still printing money. I mean, look at this. They're making over 3 to 4 billion of net income every quarter. So dividend's very safe. Look, you get a near 4% yield, only a 46% payout ratio. So 12 PE, the multiple is really low just because of the industry and the slow growth of the sales. But yeah, as long as they keep up those net income numbers, I mean, they could do tons of share buybacks, M&A. There's a lot they can do with that money. So let's see. Someone said, uh, let's see. Matthew said AHR. What's this one? American Healthcare REIT. So wow, look at this chart, man. This is a real estate investment trust. All they do is own real estate. They have a 2.5% dividend yield. Senior housing campus. So yeah, a lot of the senior housing operations have been very growthy recently. So this stock is at an all-time high. I'll put them on the watch list. That's really interesting. Another stock very similar is CTRE. Maybe you could put this one on your watch list as well. CTRE, another senior healthcare real estate investment trust. They do triple net leases on them. So pretty cool. Yeah, no problem, Fork. Let's see. Oh, yeah, no problem, William. Thanks for showing up here. By the way, I don't sell anything. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you or DM you or sell you on anything. So, yeah. All right. Someone said American Express. Yo, that's a Buffett play. You know what? Let's go back to the Buffett portfolio right here. And if, by the way, if y'all want to hit the follow button as well, we're going to be doing another live stream later tonight at 8 p.m. when the market's open. So normally I'm streaming with the market open. We see how the stocks are doing. But what is Hood Month? You know what? I don't care. I'll check that out later. But anyway, we'll be streaming later tonight at 8 p.m. But let's go back to Warren Buffett's holdings right here because Warren Buffett, his second largest holding is actually ticker symbol AXP, American Express. And this one's like a nice dividend growth company. The stock's done pretty good as well, up a good chunk from 2019. And check this out. If you buy the stock even now, you get a 1% dividend yield. And the payout ratio is under 20. They raise their dividend every single year. But yeah, American Express trades at a 21 PE. The PE is just a net income multiple. So American Express trades at 21 times net income. Industry average is a 29. They're in United States consumer, commercial services, international. But yeah, if we go to the net income right here, I mean, they're pretty much making 2.5 to 3 billion of net income every single quarter. So then they just return a lot of that to you as a shareholder. So pretty cool. I think we have an American Express card. So hey, let's see here. Yo, Q Dog said SCRV. Is that Serve Robotics? So this is another robotics name. Like if you really want exposure to robotics, like a robotics company that's going to be a winner in the long run. I don't love this one because they're only a $500 million company. And think about this, like out of all the robotics names, this is a company that literally did 600,000 of sales this quarter. Like they're doing under a million of sales a quarter. It's a tough buy. Well, again why that's why the market cap is so micro. But also look at this net income. They're losing 10 to 20 mil in net income a quarter. That's pretty significant when you're a $400 million company, revenue's low. But luckily, one saving grace here is that they've been able to dilute the life out of the shareholder to raise $183 million in cash. So look at this. If you're wondering how did the cash literally go from $40,000 or $400,000 to $183 million, when your revenue is 600,000, it's because they diluted the shareholder, and that's the right thing to do. They were like, "Wow, our stock should not be up this high. Let's issue shares." So I feel like if the stock goes up again, you also have the problem of the company diluting you, which is technically the right thing to do because they're saving themselves from any bankruptcy. Yeah. Bernsey said, "Is Palantir worth buying, or has the ship sailed?" You know what? That's a good question. And to be honest with you, I'd also love to get into Palantir stock. I love everything about this company, but the valuation is just too high. I think it's too high to get into this company. I think that for me to buy them, I need to be at like 150, like at least, like maybe. But yeah, look at this price to sales. So not price to net income, but the price to revenue is 122. That is really expensive. But here's the good news here. Half the revenue comes from the government. Look at the government revenue. It's up 49% year over year. Incredible growth on the government revenue. Also, the commercial revenue is up 46%. So both main segments of revenue are growing like crazy. They just had their first ever $1 billion revenue quarter. And on that billion of revenue, they did 330 mil in net income. So that's a 33% net margin. They also have a fortress of a balance sheet, no debt whatsoever, $6 billion of cash, up from $4 billion the same time last year. So everything about the company is super growthy. That's why they have a high valuation, but I think the valuation is a little too high. Someone said, what site app are you using to see Buffett's and Pelosi's portfolio? Yeah, hey, I'm actually on a brokerage right here where you buy stocks and stuff. If you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo. You can just type that into Google too if you don't want. But it's also an affiliate link too. So if you go and sign up and deposit $100, we'll both get 5 free stocks if you want to get this app. Yeah, you can view like Pelosi's portfolio. Again, these are like super investors who literally have to reveal all their trades by SEC law. And you can like follow them into their portfolio and stuff. You can choose the weighting. But anyway, pretty cool. That's the super investor tab. There's like Kathy Wood's portfolio. NVIDIA owns some individual stocks like CoreWeave, APOD. But anyway, let's keep going here. Sorry. Someone said VS, that's an index fund. I can't look at index funds on there. I can't look at VSAX, I don't believe. Yeah. Wait, VSTAX. I don't think I'm going to, yeah, I can't view that. Yeah, we just looked at Fortinet. If you give me a minute, we'll look at that one again. But here is Kava Group. This one just had earnings. The stock gapped down on earnings. So look at that. This is like a Chipotle competitor, like a healthy restaurant. Let's see what their earnings were because I don't remember looking at them. So they missed on revenue. They beat on net income and they beat on EBIT. So it looks like all they did was miss on sales. Even though the sales still grew, though, sales are up 20. Net income did fall by 7. So they did lose their margins a little bit. But oh, that was actually a one-time adjustment. So they technically did grow their net income year over year. Anyway, that's interesting company. Kava's 99% of the revenue. I just don't know if that'll outperform the market in the long run. Maybe Chipotle would be a bit safer. Are you buying UPS? I am not buying UPS. I think the dividend is at risk of a cut. What is it called when? Yo, what up, YouTube? I'm not sure what you mean there. Any value buys you think are insanely undervalued? Yeah, here's a value buy, I think. Again, not financial advice here. I did buy this one, and I'm down on the position still, just barely, but I bought Progressive Corp. I think this one's at a really good valuation. I think it's a value play. It's an insurance company. And here's what I love about this company, Progressive specifically. Let me go over back here to analyze them. I do own them, so I might be biased. I own about $1,000 of this stock, but first off, look at this valuation. So the PE is a 13. The industry average is 12. So they trade at a slight premium to the industry, but they deserve to because of how growthy they are. Look at this right here. So the personal lines are 81% of the revenue. I mean, look, it just hits a new record every year, every quarter. And specifically this quarter, the premiums grew 24% to $19.5 billion. And it's not just the revenue that's growing, but it's the profits that are growing, the net income. They made, it's in the first half, but basically, so far this year, they've made $5.7 billion of net income. It's insanely good. They've expanded their margins a bunch, and they pay out special dividends. So normally you only get 10 cents every quarter, but every January they do a special dividend. So you got paid $4.50 that quarter. So they're pretty cool. All right, app name, yeah, hey, Goatly. It's in the link tree in my bio. First link there. It's actually a brokerage. It's a software called Moomoo. Let's see. I own a lot of ETFs and mutual funds. I don't have any single stocks. Hey, that's awesome, agent. As long as you own the S&P 500, that's all you need. Just buy the S&P 500 and then forget about it. So yeah. All right. Epic Crypto. I'm not sure what that is, man. We don't look at crypto on here. We just look at stocks and stuff. So yeah. So yeah, let's see here. Look at Riggedy Computing. I don't love that one. And Rachel said WeRide. Yeah, this one's kind of popular. I've seen. I don't love this one. So if we go to NVIDIA's portfolio, again, NVIDIA owns some stocks. And one stock that NVIDIA owns a little bit of is a WeRide. This is actually a Chinese autonomous driving company. And the stock kind of at an all-time low. Yeah, look at this. The currency is in Chinese, so we have to convert the revenue to US dollars. What do they do? So service revenue, product revenue, the revenue is $17 million, up 60% year over year. They're losing $50 million a quarter. Luckily they have a good balance sheet from issuing from the IPO, but nothing's really blowing me away here. Low sales, losing a lot of money. NVIDIA does own them, but I wouldn't just own a stock because NVIDIA owns it. But it is interesting. I think they're just a really small cap. And I don't love Chinese companies anyway. Any value perhaps in the tech sector? I guess software is kind of at a good, Salesforce is all right. Salesforce, Adobe, man, I'm on an Adobe product every day, but investors are really sad. Like in 10 years from now, we may not need to use Photoshop and stuff because I know my friend just made this incredible logo in ChatGPT in 1 minute. So in 10 years, maybe we won't need Adobe. I don't know. But for right now, that company prints money and does insane buybacks. Oh yeah, let's look at in use stock. Yeah, try not to spam here. We'll get to all the stocks. Yeah, if you guys got any stocks, somebody look at, let me know in the chat. Oh, remind me to look at Walmart. I want to look at Walmart and CASI. Yeah, hey, we'll look at CASI. Don't worry. So here's NU Holdings. So NU Holdings is a crypto bank out of Brazil. So check this out right here. If we look at where the revenue comes from, 93% of it comes from Brazil. And that's where crypto is really the most popular for the fees that they're really trying to get. You know, in America, we have a good currency, but down there in South America, the currency sucks. So a lot of people use crypto for transactions and stuff. And basically, NU's in a great spot. Warren Buffett also owns a little bit of this company with Berkshire Hathaway, his company, but they're printing money. 5 to 600 million of net income a quarter, but do beware, they are South American, but still, I love their financials. Financially speaking, incredible company, incredible company. So let's see, CASI stock. What is this one? So Cassie Pharmaceuticals. So yeah, we don't really cover these kind of stocks on this channel. So if you look at the top right there, this is a $36 million company at all-time low. So think about that. This whole entire company is worth $30 million. And look at that, they lost 10 million this quarter. 15 million last quarter. So the reason the stock's at all-time lows is because they have a real chance of bankruptcy. So anyway, we don't really, I'd be super, super careful with that one. So let's look at Walmart right here. So Walmart stock, this is a great grocery store, and even in a recession, we go into a recession, Walmart still does good. People still got to buy groceries. And Night Watcher, thanks for the rose there for the gift. I really appreciate that. Thanks. And someone said, what's this app called? Yeah, hey, Goatly, I'm actually on a brokerage right here where you buy stocks and stuff. If you want to get this app, I'm on. It's in the link tree in my bio, very first link there. It's an affiliate link too. So if you go to deposit $100, we'll both get 5 free stocks. But anyway, here's Walmart. And, Sam's Club has been a huge growth driver for them. It's like a Costco competitor. To get into a Sam's Club, you need a subscription. So they make a lot of money off the subscription revenue. And you buy stuff in bulk. Customers feel like you get a good deal when you go there. Well, you do get a good deal. But anyway, look at this net income Walmart prints. I mean, nearly $5 billion of net income every quarter. So Walmart's making $5 billion net income a quarter. Get a 1% dividend yield. Are they doing buybacks? Let me see. They bought back like 2% of the company in the past year. The stock has been at all-time highs. All the grocery stores have done very well. I mean, look at Costco too. Costco stock has been an incredible performer as well. Great business model. So let's see. Any stock with crazy margins, was there consistently growing revenue, good free cash flow? Yeah, many stocks like that. Meta, Futu, Netflix too. Let's look at Netflix. I love this company. Yeah, let's pull up them. So Netflix, this stock is done incredible. The stock is near an all-time high. And here's what I love about this company. We can see their premium subscribers. Here's a cool little stat. So this same time last year, Netflix has 260 million premium subs. Now they have 301 million premium subscribers. And their ARPU, their average revenue per monthly paying user, is $11.69 per month per user. Pretty incredible. And look at this net income they're printing. And this is what's so incredible about them. The net income grew 45% year over year, $3 billion in net income this quarter. They won the streaming war against Disney, but Disney is starting to come back a bit. Actually, YouTube TV is kind of coming for Netflix too, but Netflix is still a great company. I'd happily own Netflix shares, but the valuation is a little high here, but they deserve a high premium for growing their net income 45% year over year. Actually, and they bought back 2% of this company in the past year too. Netflix is just cool. Any similar apps where you don't have to open an account, Matthew, to see some of the stuff. Let's see here. O'Connor, what up, dude? He said, LEU, the only US stock I'm buying is WOLF. Yo, someone said the only stock they're buying is WOLF. I feel bad if you're buying this one because this company, I've looked in this one before, they're going bankrupt. And here's how you can tell for yourself if you should buy a company or not. Think about this logically. If you understand this, then this will be good. If you look at the top right, the market cap, this whole company is worth 210 mil. So you see that? The whole company's worth 210 mil. So that's the valuation you're paying. If you wanted, you could buy the whole company for that. But look at the amount they're losing. Literally just in the past 3 months, they lost 285 million in net income. It wasn't just a one-time thing. The quarter before, they lost 380 million, then 280 million. They're super leveraged now. The liabilities they have $7 billion in debt. They can never pay off that debt. This company's just in a hole. So that's why the stock's at an all-time low. And me personally, I can't buy the dip on that one. I think they're going to just continue to keep on going lower and lower and lower. Again, not financial advice here. I'm not an expert, but that it's just tough buy there. So Connor said LEU stock. LEU, what is this one? Centrus Energy. So yeah, this one's been performing pretty well recently. Yeah, near an all-time high. I wonder what is this one in the uranium industry? So yeah, low enriched uranium. So if you're looking for exposure to uranium, this one's an interesting one. What are the sales here? So yeah, 150 mil of sales, making net income every quarter. So yeah, that's a uranium play. Another uranium play is just ticker symbol URA is the uranium ETF. So it owns a basket of all the uranium stocks. And look at that. It's pretty much at not all-time high, but well above 2019 level. To be honest with you, my favorite play for uranium would actually be ticker symbol CCO, Cameco. Probably the safest play out there. But then my second place would probably be LEU. LEU is a great one. Yeah, hopefully, yeah, you're right, PSN. Hopefully they meant WULF, not WOLF. Any undervalued Roblox, Shopify, Robinhood type stocks, you know what, are in, you know what, it's not going to look undervalued though. That's the thing. No, there's not much real undervalued juicy stocks right now, and that's the unfortunate thing with the market being at an all-time high. But I feel like this company, this does the exact same thing as Robinhood. If you kind of look on the left here, they're at a 22 forward PE. When you're at a forward PE of a 22, I feel like that they could stretch up to like a 25 PE and continue to hit a new all-time high. How am I actually? I don't even know why I'm recommending this stock, because it doesn't look like it's a good buy because it's at an all-time high. But they do the exact same thing that Robinhood does. They're another brokerage. They made 275 million net income this quarter. The net margin is a 45%. 45% net margins. That's ridiculous. Half the revenue comes from brokerage commissions. It's up 114%. Interest income's up 53%. So yeah. And they do a special dividend. If you're wondering, what is this? This stock right here is actually this app that I'm on right now, the brokerage that I'm literally using. So this literal software, this brokerage I'm on right now, that's them publicly traded, ticker symbol FUTU. So it's good to know this app that I'm using, this brokerage is doing amazing as well. Also, even if they weren't doing good, it's FDIC insured. But anyway, that's one I really like. I think they'll continue to win, but again, not financial advisor. By the way, if y'all want to support me, best way to support me is watch the stream from YouTube. I'm streaming on YouTube as well. My YouTube channel is called Nathan Roberts. So many times TikTok takes down my stream out of nowhere. So my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, and I'm streaming on there as well. So if you missed anything, you can replay it. But yeah, let's see here. Oh, Nebius. Hey, what up, Box? So if we go to the NVIDIA portfolio again, here's a really cool company. Oh yeah, we could look at the trade desk right there as well. Yeah, we'll look at that one. But one company NVIDIA owns is NBIS. This is Nebius, and this one had some pretty incredible earnings. And again, just because NVIDIA owns a stock doesn't mean you should. So you always got to go do your own research on a company. When we go do our own research on Nebius, I'm seeing a lot of stuff I like here. Look at the growth of this company. This is ridiculous. Literally the same time last year, the sales were 15 mil. Now it's 105 million. That's an incredible 600% increase in the revenue. A really good balance sheet on this company as well. So Nebius is just a super growthy company. I see why NVIDIA owns them. So yeah. All right. PGY, check it out. Let's see. PGY stock. Pagaya Technologies. So looks like this one's done decent the past year, but a $2.5 billion market cap. Let's see here. The sales growth is good. Sales are up 31% year over year. They are net income positive now. Actually, wow. So they should be making net income every quarter from now on. So they're interesting. Cash flows are off the chain now too. Yeah, hey, they're interesting. I wonder what segment they're in. Wealth fund is going public. Hey, that's interesting. Got an interesting stock. What about Webull stock? You know what? Yeah, let's look at Webull. Oh, remind me to look at the trade desk again. Tell me, put that one in the chat. So here's Webull right here. This stock is, I have a Webull account as well. So you know what? I have given them a lot of transaction fees. So yeah, here's my Webull portfolio. By the way, I like being fully transparent. Here's my all-time return. We're up 16% all time. Not exactly outperforming the market. We have some winners and some losers in here. How about year to date? How are we doing year to date? Yeah, hey, actually, we're doing pretty good year to date. Up 27% year to date, $91 of dividends. A lot of that is come from Robinhood. Dude, Reddit's at an all-time high today. AMD's been doing great. A lot of these stocks, SoFi, they're doing really good. But anyway, that was my Webull account. Here is their stock publicly traded. So Webull did just IPO about a couple months ago, and there's not too much we can look at here. When I was reading their investor relations, they do have a bit of a complicated share structure, but we can see they're growing. The revenue's up 32%. And look at this, they actually are net income positive. They made net income this quarter and net income last quarter. Hopefully this can turn into like a Robinhood or a Futu where they kind of trade with Bitcoin and how the whole market sentiment is doing. So anyway, Webull needs to catch up with Futu and Robinhood, but they're interesting. And I use their app too. Hey, Finny. Oh, thanks for subscribing. I really appreciate that, man. Thanks so much. Yeah, hey, best way to support me is just hit the subscribe button on my YouTube channel. Let me know in chat if you subscribe. I'll give you a shout out. But yeah, hey, thanks, Francisco. Let's look at the trade desk right here. Unfortunately, this company has had two different headwinds. Like they're losing a lot of top customers. Like they lost Netflix and they lost their margins and they have a high valuation. So they're trading at 63 times their net income. So pretty expensive valuation. And we don't really know how much the net income is going to grow from now on. It might not CAGR at the same 15% we originally thought. They also gave bad guidance, basically single digit guidance. And when you have a high PE and the growth slows, it's not great. But anyway, for right now, the company looks pretty good. Well, look at this. The revenue's up 18% year over year. So revenue's up 18, but net income is only up 6%. So that means the margins did fall 10% year over year. Not great, but yeah, I think that one might be it's worth putting on the watch list. I have a scary feeling. I think it's going to go a bit lower before, like to say this is the bottom and it's never going to be the same price again. I think it's tough to say that. So that one's on my watch list to potentially buy later on. I just have a scary feeling it might go lower. Any beginner course from scratch? Hey, nah, man. So most people would say, but hey, I don't sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. Literally just on here giving my opinion. But if you want to learn from me, I guess I have some YouTube videos. My YouTube channel is called Nathan Robert. Linktree in bio as well. You can just type in YouTube, Nathan Robert. Let's see. Alina Metal said Qualcomm, QCOM. So this one is a huge smartphone chip play. I think they own like Snapdragon or whatever that chip is called. But anyway, check this out. Actually, we should see their market share. So yeah, smartphone chip market share is a 28%. So a huge market share for smartphone chips. And look at their net income they're making. I mean, nearly $3 billion of net income every quarter. The dividend is a 2.2%. You get a nice yield. The PE is a 15. So they're trading at 15 times net income. The industry average is a 48. So I feel like that could stretch up to like a 20 PE. But what is the sales growth? This might be why. So, I mean, it's still double digit. So it's up 10% year over year. That is interesting. Why do they have such a low multiple? I don't know. But yeah, that was them. If you had to pick, which one would you recommend, Microsoft or Meta? Oh, those are two great companies. You know, I decided to pick Meta because I think Meta, both, the real answer is both, but I do own Meta. So I'll just go over Meta, for example. This is such an incredible company, man. They have like, it's a $2 trillion company with 40% net margins. I mean, and a fair valuation. I mean, look at this. Meta, for a Mag 7 company, they're still trading at a 28 PE, 28 times net income. I feel like that could stretch up to a 30, like go to $800 plus before it really starts to slow down. But look at their active users as well. They literally have 3.48 billion daily active users. So literally half the world is on a Meta app a day, which is just nuts. But the growth is insane here. Like revenue's up 22, net income's up 36. So that means they're growing their net margins, 40% net margin. They're now introducing ads to WhatsApp. They have the super intelligence team they're building. They're going to be a winner in AI. I mean, this company's undervalued even without the AI stuff because there's so many earnings tailwinds for them. Their Threads app is nearing the same amount of daily active users as X. It's just incredible. 400 million or monthly active users over there. So let's see here. Sirius Radio, please. Is that SIRI? So, all right, Sirius XM. So this stock right here is at an all-time low. It's basically just a slow grower. I mean, it kind of reminds me of Comcast. Like if we just go to the revenue right here, I mean, it just slowly is just going to bleed out. I mean, it's going down single digits every year. But the good news is the reason you're buying this company is because of the dividend. You know, you get a 4.7% dividend. The dividend is safe, luckily. And look at this right here. Berkshire Hathaway, which is Warren Buffett company, is the largest shareholder. So Warren Buffett owns 37% of all the shares. So basically, look at this right here. They had these one-time adjustments. Let's just call it, they're making 300 million of net income a quarter, probably a little more than that. So just over 300 million in net income a quarter. How much does a dividend cost? The dividend, oh, so look at that. The dividend only cost 92 million. So the dividend payout ratio is safe for now. But again, it kind of is expected to kind of trend down the sales. So we want to see the growth come back. Maybe they can do an acquisition. Someone said what happens is, yeah, hey, bro, J-Vlogs, if you go to the link tree in my bio, the very first link there, you can get this software I'm on. It's a brokerage where you buy stocks and stuff. It's also an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. It's my favorite app for analysis and stuff. You can see the super investors' portfolios and everything too. Anyway, lowest fee, most useful broker in my opinion. You know, I like it more than Webull and Robinhood. All right. Anyway, let's see here. Are they real users? Could not be. You know, that's something I am questioning because so Meta has 3.5 billion daily active users. You know, all Meta apps are banned in China. So first off, that takes out like 1/3 of the world. It's kind of tough to say that. Like, it is tough to believe. All right, let's see here. BRRR. So yeah, this is what is this? Wait, BRRR. This is CoinShares Bitcoin ETF. What is so it looks like it just owns Bitcoin. So yeah, basically this just does whatever Bitcoin does. And since it's an ETF, you're SIPC insured for $250,000. So yep, that just tracks Bitcoin. Is DCTH a buy right now? What up, Johnny? So I normally don't recommend these kind of stocks, and I'm not really going to recommend it. But here's one I do own, and if for whatever reason you're daring enough to take a position in this, you can't make it a huge position. You know, it's a $130 position for me. It's a joke, but here's what's so interesting to me about this stock right here. Let me tell you guys about DCTH. So first off, here's why I normally don't recommend this kind of stock. Look at the top right, the market cap. This is a $360 million company. So kind of remember that. The whole entire company is worth $360 million. And guess what? They have 81 million of cash and no debt. So they have no debt at all, 81 million of cash. So a lot of their market cap is just their cash on hand. And check out the growth here. Here's what's so cool. Revenue's up a lot, 211%. Obviously, it's easy to grow from small numbers, but revenue's up to 25 million. And on that, they made 2.7 million in net income. So here's now a company growing like crazy, now going to be making net income every quarter with 80 million of cash and no debt. And the whole company is worth 360 mil. One bad news is they are diluting the shareholder a bunch, but it's worth a very, 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 very small position, I think. That's why I own, $130 in that one. Again, you don't want to have a huge position. Could be a zero, but out of all the companies out of all the $300 million market cap stocks, that one's really interesting to me. Anyway, let's keep going here. Underwater said Chevron. Hey, yeah, that's a Buffett company. So if we go to Warren Buffett's stock list right here, his portfolio, 7.3% of his portfolio is in Chevron. So check this out right here. If we look at the yield, you're mainly buying this for the yield. Here's what's cool about oil stocks. You get high yields. So you get a 4.3% dividend yield with this company. And look at this net income. They're making $3 to $4 billion in net income a quarter. Has anyone noticed like oil prices this summer were oddly low? Oil hasn't been high, so their profits haven't been as high. They own the gas stations as well. So Chevron's interesting. It's always worth being diversified and having a small chunkier portfolio in oil, but still with the expectation that oil stock won't outperform the S&P 500 in the long run. But it's nice to have in case there's like war fears. That's when oil goes up. Currency fears, inflation. Oil does good in those environments. What app are you using? Hey, John W. This is actually a brokerage right here, software. It's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo. You can just type it into Google called Moomoo. But if you go to the link tree in my bio, first link, it's an affiliate link. So if you go and deposit $100, we'll both get 5 free stocks. Is my favorite app, lowest fee, favorite broker. But anyway, let's see. Someone said, can you look at FSK? I think that's a BDC. So that's a business development company. They do loans and they have a requirement by law. Here's an interesting thing. Literally by law, they have to pay out 90% of their taxable income in the form of a dividend. So these companies have abnormally high yields. Let's see here. Yep, a 16% dividend yield. So a very high dividend yield on this company. So look at that. I think this is why the stock just fell a big chunk. Look at that. So they used to make 100 mil plus in net income a quarter. Then for some reason it went negative 200 mil. So I do have some questions. That might be why the stock is falling. But basically you're buying them for the dividend. You won't really outperform the market in the long run. Like when we looked at their stock, the stock is lower than they were in 2018, but you get the nice yield. I meant GRRR. Oh, hey, is that Gorilla? I don't love this company, to be honest with you. So Gorilla Technology stock, it's only recently recovered. So again, it's still a very, very small name, a $390 million company. Let's see, do they have sales? Uh, they do have some sales. So 21 million of revenue, lost 4 million. All right, market, all right, balance sheet. Maybe from issuing shares. Yeah, that has to be the case. But yeah, again, nothing's really blowing me away here. Yeah, I mean, it's like a momentum name right now. What are your What are your top five investments? So yeah, my largest one is FIX right here, Comfort Systems. I got 12 shares of that one. This is a HVAC company, heating, ventilation, air conditioning. It's been on fire recently, but my largest holdings are actually over here in my dividend account. So yeah, Carlisle, Constellation Energy, McDonald's, United Rentals, Meta, Google. So yeah. Um, let's see. Pepsi. Yeah, we can look at Pepsi stock. So yeah, this company right here has had a nice little recovery since earnings day. You know, I almost like them a little more than Coca-Cola. I do own Coca-Cola Consolidated, but PepsiCo owns Frito-Lay. So they own like Doritos, Cheetos. They own that little snack business. But the net income, they're making like 2 to 3 billion net income a quarter. It did fall. Well, actually, that was a one-time adjustment. It fell like 10% year over year, but yeah, revenue is up by one. We would like to see some higher growth. That's kind of why the stock is flat since 2021. But you get a nice yield with Pepsi. That's the main part. I think this dividend is going to be safe. You get a near 4% dividend, 3.7% dividend yield. So talk about options. Like, yeah, I don't really do. I don't have any options. I don't really do options right now. So yeah. Um, Let's see here. I just love buying shares of great high quality companies. Is Novax a good buy? I don't know what Novax is. If you give me a ticker symbol, maybe I can find it. All right, so let's see here. All right, so Mateo said ATFN stock. What's this one? ATFN. I actually, that stock doesn't exist over apparently. So can't find that one, man. Are you buying Rich Tech Robotics? Nah, man. Reddit stock. Yo, Tazel, I agree, man. Reddit has been on fire, dude. Reddit's actually at an all-time high. So congrats if you ever owned Reddit. And a lot of people think Reddit is a meme company, but they actually deserve to be at all-time highs. Their ARPU, their average revenue per user is up 50% year over year. They have the cheapest ads. And like if you go spend $100 on ads on Reddit, you're almost for sure getting $100 back. You're getting a better rate of return than Meta and all these other apps. They purposely are having low price on their ads to just get a bunch of people on their network. But what other companies growing like this? The revenue's up 77% year over year. That's incredible growth. 77% revenue growth, 90 mil of net income. They don't really need, like they have 90% gross margins. Like it doesn't take much to run Reddit. And they have no debt at all. Reddit is a debt-free company and they have $2 billion of cash on hand. Free cash flow as well is like incredible. It's over 100 million a quarter, up 300% year over year. So everything about Reddit is headed in the right direction. I can understand why they're at all-time highs. They deserve to be at all-time highs. I don't think I would buy this one at all-time highs though. So Aiden, yeah, hey, try not to spam, brother. What's up, man? He said RXRX. So this is a company I'd actually stay away from. So if we go to NVIDIA's portfolio, again, back to the NVIDIA portfolio, NVIDIA does own some stocks, and one stock that NVIDIA owns is RXRX. And here's why I would stay away from this company. Just because NVIDIA owns it doesn't mean you should, but kind of think about this logically here. The top right, this market cap, it's a $2.5 billion company. Here's why this stock's at an all-time low. It's just hard to trust. Investors can't really trust this name. It's a $2.5 billion company literally losing close to 200 million in net income a quarter. That's 10% of their entire market cap. So for that reason right there, and look, they're losing 200 million a quarter for a business that did 19 million of sales. So I just can't really trust RXRX, and I can see why they're not doing too good. But NVIDIA does own them. That is interesting. Jake said IXHL. What is that one? IXHL. Ncanex Health. Oh yeah, we don't really cover these stocks. Look, this is a $30 million company. The whole company's worth $30 million. The stock's at an all-time low. They lost 4 mil this quarter, 5 mil. So they lost basically their entire market cap of net income in the past year. So it's tough, man. It's tough. Deal said Hood stock. Hey man, I haven't looked at Robinhood all day. So check this out. Actually, I do have a Robinhood account. Here's my Robinhood portfolio. I also have a Roth IRA with Robinhood, so pretty cool. But I actually own this company. It's my best performing stock of all time. It's been Robinhood. I regret every share I've ever sold in them, but we are up a crazy 720% on Robinhood. So I sold most of my shares. By the way, I've been holding this stock literally since, look, it's IPO. There were my buy orders. I bought Robinhood at IPO, just waited, 5 years and I'm finally up. But anyway, let me analyze this company for you. They deserve to be at all-time highs as well. They're so innovative, so growthy. Check this out. We look at the revenue. Revenue is nearly $1 billion. It was up 45% year over year, 990 mil of revenue. And on that 990 mil of revenue, they made 390 of net income. Insane margins here, 40% gross margins. So just people are really starting to take Robinhood serious. They're making a couple hundred mil in net income a quarter, when they used to lose a couple hundred mil in net income a quarter. So ever since they started promoting their Robinhood Gold subscription, they've been blowing up like crazy. So anyway, yeah. And they have some new Hood Month thing. You know what? I'll check this out. Mystery drop revealed in one day. Yeah, here's kind of some benefits you get. But anyway, if you want to get Robinhood, by the way, I have an affiliate link in a link tree in my bio. It's like the third link there. Although I like Robinhood, my favorite brokerage would be this one to really do analysis on. But I like that one for the Roth IRA match. Okay, let's see here. What do you think about GPUS? Is that an ETF right here? Oh, hyperscale data. Yeah, okay, 16. Yeah, this is junk right here. $16 million company at all-time low. We don't really cover these stocks in here. Let's see. BMNR. Yeah, we just covered those stocks. BMNR, this is basically the Ethereum company that Tom Lee works for. Yeah, it's basically they just buy Ethereum and then you just trade the market cap off their NAV of the Ethereum. So yeah, all the revenue comes from their self-mining. So it's basically just an Ethereum proxy. All right. Let's see. Supermicro. Man, Supermicro is a tough one. Thoughts on UPS? You know what? Let's look at UPS real quick. So this one is, in my opinion, a dividend trap. And here's how you can tell for yourself if a company is a dividend trap. So first off, look at this. You get a 7.4% dividend yield with this company. So let's go see if that's sustainable. A 7.4% dividend would be great, but can they afford it? Let's go find out. So check this out. Here's what you do. You look at the net income they made in the most recent quarter. So they made 1.28 billion of net income this quarter. We'll just round it up to 1.3. So they made 1.3 billion of net income this quarter, and the dividend cost 1.35 billion of net income a quarter. So unfortunately, they cannot afford the dividend right now. They have to at least make 1.35 billion of net income. Even if they're close to the payout, all their money's been eaten up by the dividend. They have no leftover money to do anything with. So it's just a tough buy. I think they might have to cut their dividend, which would actually be healthy for the company. All right, so that might be why the other UPS, FedEx is doing relatively a lot better. So let's see here. Marvel Tech. Yeah, we'll look at Marvel. I think this is one of the cheapest chip plays out there. They're finally starting to get net income positive again, which is great news. So check this out. If we look at their net income and zoom out, they used to lose a couple $100 million of net income every quarter. It was a tough buy, but now they're finally profitable. They made, 200 mil for the past 2 quarters. It's great news. Revenue's up 63% year over year. Incredible growth on the sales. So yeah, it's just a growthy chip play that I think is a bit cheaper than AMD and NVIDIA. I do like them. Okay. Intel, given the possible government stake, I think that's life-changing for Intel. I think there's actually, reviewing how the government is handling this, they're going to announce how much stake they're going to take in a couple weeks from now. But basically, by the way, Intel is the same price that it was back in 1999. We're trying to save like American chip manufacturing. Like Apple has to invest like a couple $100 billion into the U.S. I think one way they could do that is by like taking a stake into Intel. And I'm going to look into that. But I think Intel is decent. Yo, what up, John? How's it going, man? What app you using? Hey, MJ, I'm on a brokerage software right here. If you want to get this little brokerage I'm on, it's in the link tree in my bio, the very first link there. But someone said Cloudflare. It's also an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. Or you can just go into Google and type in Moomoo. But anyway, here's Cloudflare. This is an incredible cybersecurity company. They handle a lot of internet traffic literally through lava lamps for randomness. I kid you not. They have a literal lava farm, uh, or what did I just say? Lava lamp farm where they pass data through. It's pretty incredible. But anyway, Cloudflare, literally 20%, you ready for this? 20% of all global internet data goes through Cloudflare, or global internet traffic goes through Cloudflare in one way or another. So huge internet company. The revenue hits a new record every quarter. I mean, look, it was 512 mil this quarter. If we zoom out, it just hits a new record every quarter. These year-over-year growth rates are incredible on Cloudflare. They are still struggling with net income positivity. Like they did lose some net income the 2 most recent quarters, but it's really all right. Has your portfolio changed due to Warren Buffett? Not really. I haven't really made any changes. I've only I bought some gold, technically like gold exposure through RGLD, Royal Gold. It's a gold royalty company that has a 1% dividend and no debt. They're pretty interesting. I might make a video on that. We noticed Cloudflare when you go on actually Cloudflare, whenever you go on a website, it says like, oh, we're up, you're up, but it's the middleman that's not available right now or is down. Anyways, let me see here. Take-Two Interactive, TTWO. So yeah, this is the company that owns Rockstar Games. So you heard of Red Dead Redemption, GTA 5. This company owns that. And of course, they own GTA 6. They're in such a unique position where they have this asset, GTA 6, that they're about to release. They haven't released it yet, but whenever they release it, it's literally going to bring them in billions of dollars, like within the first month. So whenever they release that asset, it's going to bring so much growth to the company, and they're probably going to make a boatload of money off this. They're probably going to milk it, sell like skins, DLCs, whatever. And it's going to be an expensive game as well. I heard a lot of people like, I'm a grown man. I don't care if the game costs $200. I'll still buy it. Or maybe they'll have some like monthly subscription. I don't know. But they're interesting to see what'll happen after they release GTA 6. That's why they're so highly priced right now, because there's a lot of future growth. Yo, it's Will. How's it going, man? Good afternoon. Yeah, happy Sunday, everyone. Hope you're having a good Sunday. By the way, if y'all want to hit the follow button, we're going to be live later tonight at 8 p.m. when the markets open again. So another live stream later tonight. We do the same live stream every single Sunday. So if y'all want to hit the follow button, we live stream every Sunday. I sell nothing. I have no course, book, Discord. I stream every day, by the way. So I stream every day. And anyway, Peter said ANET, Arista Networks. So this is a really nice growth company as well. They're printing net income. So check this out. The stock's at an all-time high. They deserve to be at an all-time high. I mean, they sell products and service. How's the product revenue? So yeah, look at this. I mean, it's just at a new record. Hits a new record every quarter, up 32% year over year. Service revenue is up 22. So both segments of revenue are growing nicely. And look at the profits here. The after-tax net income was literally $888.8 million the most recent quarter. So they're printing net income, nearly $1 billion of net income a quarter. It'll eventually get to that. Really good balance sheet as well. So cash flow is also insane. They're making more free cash flow than net income. Ridiculous. So yeah, they're a really, really profitable company. So let's see here. Oh, United Health. Yeah, we'll be quick about this one. We looked at UNH not too long ago, but basically Warren Buffett just took a huge stake into this company. So yeah, if you're wondering why did the stock go up so much on Friday here, is solely because Warren Buffett decided to buy them. And Warren Buffett usually does a lot of due diligence before he buys a stock. Anyway, the PE has collapsed on this company. The price of net income is at 13 because of all the future uncertainty and the decline of the net income. Like, look at this. They made $3.74 of net income. They missed on it, but they're expecting in 2 quarters $1.70. That's more than the cost of the dividend. So the dividend they won't be able to afford it. But that's why the multiple's so low. So it's already priced in a lot of it. But yeah, the yields are 3%. They're the largest healthcare play. I think I can see why Buffett bought some. I think Michael Burry bought some as well. Please, yeah. Hey, FUI. There's actually a brokerage right here where you buy stocks and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. Pretty cool. So anyway, let's see. Galaxy, GLXY stock, and CDE. Oh, remind me to look at CDE. GLXY. What is this one? Galaxy Digital. Oh, I have to go in 10 minutes. Hold on. Set an alarm for 10 minutes. I have to be I have to go at 2. I really Hey, by the way, we're gonna be live streaming later tonight at 8 PM. So anyway, here's Galaxy Digital. They did just IPO, so digital assets, they might just own a bunch of like digital assets like Bitcoin or something. I don't really know. So I got to do more research on this one. Maybe I can read here through digital assets and data centers, trading advisory. So anyway, they're interesting. I got to do more research on them, but are they net income positive? They did make net income in the 2 most recent quarters, 30 mil, 30 mil. Says they made 30 mil of operating profit. That's interesting. But wait, what was the stock I wanted to look at? CDE stock. What's this one? And we can look at Roblox too. Dang, my phone is getting low. I'm on 7%. So Courier Mining, this might be a gold stock or something. The stock's pretty much at an all-time high today. Let's see. So yeah, these are the names of mines like Wharf and Rochester. So let's see here. Net income. Yeah, look at that net income they're making. 70 mil the most recent quarter. Let's see. I'm pretty sure these are gold mines, but yeah, they say precious metal. Yeah, it includes gold silver complexes. So yeah, it's a gold silver play. Interesting. Oh, Roblox stock. You know what? If we go to Kathy Wood's portfolio, we go back to her portfolio right here. Her fourth largest holding is actually Roblox. So yeah, here's Roblox right here. They did just face a lawsuit on Friday. Louisiana is suing them for safety concerns. Yeah, if you kind of read this article right here that I'm hovering, uh, Roblox stock gets punished as outrage rises against the platform for enabling child abuse. So anyway, not good news around Roblox regulation-wise. But anyway, here's why the stock has been doing so good recently. Check out this number. This is a cool stat we get. Their daily active users, so not monthly, but daily active users was 111 million the most recent quarter. This exact same time last year was only 80 million. So their daily active users went from 79 to 111 mil. Great news. But I still be careful with this company. They are still losing a lot of net income every quarter. That's because of their stock-based comp. They're paying employees like 300 to 400 million a stock a quarter, and that's included in GAAP net income. That's why the free cash flow is positive. But it's tough, and they have a pretty leveraged balance sheet as well. So I'm not loving Roblox at this valuation, but they are interesting. Let's see, SBET, please. Yeah, I can't cover this stock right here just because of the industry that they're in. Last time I did, they took down the stream, so I do apologize there. Let's see, CELH. Yeah, we already looked at CELH a bunch of times. Let's see, TSSI. Yeah, let's look at this one right here. So TSSI, what happens is, yeah, hey, Conhad, it's in the link tree in my bio, very first link there. So here's TSSI. I do own this company, by the way, and I am down on it. So check this out. If we go to my Roth IRA right here, I have, again, very, very, very small position, 5 shares. I spent about $100 on this stock. With these small cap companies, you cannot put a meaningful amount of money in these. Look, the whole market cap is 409 mil. So the whole company is worth 409 mil. Here's why I bought them. It's because they're worth 409 million and they're making a couple million every quarter. Look at that. They made 1.5 mil this quarter, 3 mil last quarter. So they're making net income every quarter. The revenue has been growing pretty good. The revenue's up 260% year over year. So I just like them for the growth. Look at that. The assets go up with the liabilities every quarter. But again, they're only a $400 million company. You got to be very careful with them. Yeah, hey, no problem. Hey, Ferns, if you got another stock you want me to look at last minute, let me know. I do got to go in like 5 minutes here. CEG, Constellation Energy. Yeah, so check this out. CEG, this is the largest nuclear reactor play out there. So if you want exposure to nuclear reactors, this is the best way to get exposure to them. I am biased though. I do own this stock. It's my second or third largest position. Yeah, CEG, Constellation Energy. I own 15 shares. We're up 56% on them. So yeah, basically they own a bunch of nuclear reactors, and they're also doing a bunch of buybacks. Yeah, they're making a bunch of net income every quarter. They just did 400 million of buybacks this quarter. They just acquired Calpine, and as soon as the Calpine acquisition closes in Q4 of this year, their free cash flow goes up by $2 billion every year, and their yearly EPS goes up by $2 a share. So the forward PE on that company is like a 28 when you go out 2 years. All right, thanks, Ferns. I appreciate the kind word. Do you think TTO can hit 140 or $400? I don't know. That would be crazy. I think it is somewhat priced in a lot of the growth that's being expected from the game. So I work for MP Materials. Hey, pulled back extremely. Hey, what up, SFGX? And Mook said MP. I work for MP, and they gave us shares every year. Well, hey, thank goodness they gave you shares every year because your stock stock-based comp must be doing incredible right now. Look at these shares. It's really because the government, the reason the stock is at all-time highs right now is because the government just took a huge stake in this company for a rare earth precious metal mine. And basically it's supposed to, this one mine is supposed to supply the US for the next 50 years of certain minerals and rare earth metals. So it's pretty cool. That's going to happen in like 2 to 3 years, though. But we're poking a lot of other countries. It's good that we're starting to invest in the U.S. to be more like independent for all the resources we get. Enjoy watching your streams. Hey, thanks, John. I appreciate that. I do got to go in 5 minutes, but just so you guys know, I am going to be streaming later tonight at 8 p.m. So when the market opens, we're going to be streaming again. So if y'all wanted the follow button, we stream every Sunday this exact same time. What platform we're using? Yeah, hey, Nolan, by the way, it's a brokerage that I'm on right here. It's in the link tree in my bio, very first link there. You buy stocks and stuff. It's my favorite app. You can do the lowest fee brokerages. It's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. Full disclosure. But or you can just type it into Google. It's a brokerage called Moomoo. What's the safest investment right now? To be honest with you, the safest investment, and I just bought a share of this on Friday, is McDonald's. Man, McDonald's, even in a recession, like in 2008 when we had the huge recession, McDonald's didn't fall because they're recession resilient. Whenever we go into recession, McDonald's sales historically go up. And whenever there's a recession, McDonald's acquires a bunch of cheap land. It's pretty amazing, the company. They're also a royalty company. Literally, if you go spend $100 at any McDonald's, $4 of that goes back to the parent company, the corporation, as a high margin royalty. So McDonald's collects crazy royalties, and their international markets revenue grew by 10% year over year. They had that. Does anyone remember the Minecraft meal? The Minecraft movie collaboration was huge and drove a bunch of sales for the quarter. They have a 2.3% yield. Anyway, McDonald's is a unique company. No other stock is like positioned like them. But let's see. And I gotta go. Oh, I gotta go in 1 minute. So Sunday, the stock market opens. Yeah, hey, John, at 8 p.m., the stock market does open, and we'll be able to see how the stocks are moving, how the S&P 500 does. So UZ said, yo, what up, big boy? What's up, dude? Someone said Rumble stock. I do own Rumble, by the way. A very, very small position. Honestly, I would never recommend anyone to buy this stock. It's kind of junk. They lose a bunch of money. Like, they're burning so much net income every quarter, and it's not really getting any better. And the sales are only up 11% year over year, so not great. The balance sheet did just get fortified because literally, and I've never seen this happen for a publicly traded company, Tether, if anyone knows Tether, the crypto people just donated them like $200-300 million, like just donated it. I've never seen that. So, but that one, it just loses a bunch of money. It's kind of like a free speech platform, but it's not great. I do own them though. That you've all seen. Hey, thanks, man. Thanks for, yeah, hey, Yarda, I will be live later tonight. In exactly 6 hours from now, I should be live. So if you want to hit the follow button, notification bell, do that. And hey, best way to support me, hit the like button. Oh, actually, the best way to support me is hit the like button and subscribe to my YouTube channel. I'm ending the stream here now, but my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. But if you missed anything, you can replay the stream on there. I stream on there as well, and when the stream's over, you can replay if you missed anything. The beginning of the streams are really cool. So yeah, best way to support me, subscribe to my YouTube channel. It's called Nathan Robert. I sell nothing. I have no course book, Discord, WhatsApp, Telegram, but I do have, I guess, technically an affiliate link. So if you want to sign up for this app that I'm on right now, my favorite brokerage, it's also in the link tree in my bio. It's actually the very first link there. If you go and deposit $100, we'll both get 5 free stocks. So yeah, it's my favorite platform, lowest fee brokerage, most best free tools. But anyway, yeah, hope you guys have a great rest of your Sunday. We'll be live in 6 hours from now, and I'll see you guys very soon. Happy Sunday. Yeah, hey, you too, Sodi. Happy Sunday, everyone. Have a great rest of your day. And thank you for y'all on the YouTube stream. Hey, what up, Rich? Thanks for showing up to the YouTube stream. And Rachel, hey, I didn't even know y'all were in here. Thanks so much for showing up to the YouTube stream. Y'all are the best. I'm really trying to build up the YouTube channel more than the TikTok, because TikTok keeps taking out my streams and stuff. It's very annoying. So thank you all so much. Hope you have a great rest of your Sunday. I'll see you very soon.